program was created to support and fund Black-owned businesses in the city of Oakland. The reason we started this fund due to the systemic racism behind the PPP funds, also how our Black-owned businesses have been marginalized for so long.
I'm standing here right now because we did get the resiliency fund. I only had enough to kind of just pay payroll for a couple of more months, but I said no new initiatives. Now that we have some new initiatives, we have other revenue streams coming in, and that's what's helping to keep things up.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. A deal in Europe will create one of the continent's biggest payment providers. Nexi has agreed to buy fellow Italian company SIA in a $5.3 billion all-share takeover. It took more than a year of negotiating to reach the agreement. Japan's NEC has agreed to buy Swiss banking software firm Avaloq Group. The price? A little more than $2.2 billion. NEC is making a push into technology for the financial services industry. Avaloq offers cloud services to banks and wealth managers. And China's largest chip maker says the U.S. is placing export restrictions on suppliers. According to the company known as SMIC, U.S. suppliers have been told they are subject to additional limits. SMIC is in discussions with U.S. officials. And that's your latest Bloomberg Business Flash. Tom Fancy.
Ritika, thanks so much. Very quickly here on the data, lift to the markets up 18, Dow futures up 151 as well. The VIX 29, 28, 29 right now, 29.03. And as yields, who's been speaking to Jim Caron of Morgan Stanley, yields are higher. Francine?
Yeah, Tom, looking at consumer companies and banks actually leading this pretty much broad advance amongst European stocks. If you look at the haven assets, so they've been dipping. I'm looking at gold, I'm looking at dollar. They're all edging lower. So there's definitely also financial stocks on the higher alert here in Europe. On the stimulus front, there's still quite a lot of hopes that we get something between the Democrats and the Republicans. And then overall, Tom, I also need to watch out for a pound, 129.36. Coming up, we'll talk Brexit. We'll also talk Apple with the EU Commission Vice President, Margrethe Vestager. That's at 11 a.m. in New York. That's 4 p.m. in London. And this is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
What would you say are the leadership qualities that you brought to the table or that you most admire?
I don't always have to be the smartest person in the room. I know collectively what a team needs, and I love having really great debates.
Valuations, particularly, sort of technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It's been a very interesting journey. I learned a lot about COVID. I learned it by really going to school. This is the real school.
We need to have trust. We need to trust that what they're telling us about the president's condition is real. We have to have confidence in the judgment of the doctors who are treating him.
Look, he's doing very well, and just like it could happen to anybody, but we're prepared. Look, we have a great vice president. We have a government that is steady.
His spirits were great. He was in a great mood. He was as direct and candid with me as he always is, and it was a great conversation.
A nice summary there of the voices through the weekend. We're hearing the voices now in Paris. We're going to get to Jim Carrey in a moment with Morgan Stanley. We're going to hear the voices in Paris as well through the day. And now we hear the voices in London. The Prime Minister of the United Kingdom, Francine, is focused on cinemas. Why?
Well, it's shambles, Tom. So we heard yesterday, actually, through a press release that Cineworld, this is one of the biggest theater operators, actually, in terms of cinema operators here in the UK. It also has quite a lot of exposure to the US, saying that because big movies have been, delayed, for example, James Bond, but also many other Disney ones, because they're not in the cinemas, people aren't going to the cinemas. So now there's 45,000 jobs at risk, and they'll have to maybe close down some of also, the arty cinemas that they have here in the UK. I mean, 45,000 jobs is a lot, so that's UK and US. Boris Johnson, after telling people to stay at home, work from home, now, briefing, but go to the cinema. I think this is probably a gut reaction, Tom, to the fact that he's, seeing his economy down. But frankly, it's a bit shambolic, because as a citizen, well, what do you do? Is it safe to go to the cinema? Am I just trying to save, jobs, or is it really safe for me to sit there for 2.5 hours? These are some questions that, we need to ask ourselves.
This is the chaos of the moment. James Carrey with us with Morgan Stanley. Of course, we're looking at fixed income. When Jim Carrey started out, you got out a pair of scissors and you clipped a coupon and said, thank you. Jim, those days are over. How do you position away from full faith and credit if you live in a time where you're considering lockdowns but go to the cinema? I mean, what do you do with non-full faith and credit?
Yeah, so look, I mean, I think that the key here is to have a balanced portfolio, and you do want to have high quality assets in your portfolio for liquidity and for safety and for protection. But what we also have to remember is that there's a significant and very, very large policy response that's going on, quantitative easing, that's also there for investment grade assets as well. So credit, for example. So that might not be full faith and credit paper like U.S. Treasuries, but it still has the backing of the central bank. And the other parts to this too is also remember what the policy is right now, both on the congressional side, the fiscal side, payroll protection programs, things like that. I know that's sort of run out at this point, but we're hoping that we get that back. The point here is that the savings rate for the consumer has risen quite a bit. And what consumers have done is that they're paying their bills. So what they did with the PPP money that they've had coming in is they've saved it, and they're able to pay the bills, at least for now. Now, if we don't get another stimulus package and there's more layoffs down the road, that could change. And this is why I think it's very, very important to for Congress to get something passed at some point soon. But the point here is that asset-backed securities, credit cards, auto loans, other, mortgages, these aren't really seeing very high default rates at this point. So they're carrying a decent yield, but very, very low default rates. So these are areas that you can invest in as well. And even in high yield has gotten hurt. Certainly, it's down maybe about 1%. Just if you look at the index for the year, this is Barclays aggregate index. But there are areas like the double Bs, the higher quality part of the high yield index, have been doing pretty well also. So there are many places to go to invest.
So Jim, to sum that up, that was a beautiful walkthrough. The way to add value to find a coupon or a total return is through credit analysis, not the larger economics. Is that right?
Yeah, it's become a lot more idiosyncratic, but we also have to marry it with the policy response, right? So in other words, the macro component to this is extraordinarily important, because what we have to understand is what the Fed is doing and also what the federal government is doing and which assets are being supported as a result of their policy. And then what we can do is we can be very, very selective about what we want to buy in the credit areas. For example, like I was saying, investment grade, still with a really big bias towards higher quality. And then you can put together a portfolio, and we call it like a barbelled approach, where you have you have a lot of high quality on one side, and the other side you can have some lower quality where you get a bit more yield. Now, so far, as long as interest rates stay very, very low and very stable, then what we expect to see is a convergence in those yields. So in other words, a tightening of spreads, which adds to a total return of owning credit-orientated paper.
Jim, what about corporate bond exposure to travel and leisure stocks? So is there, once we have a vaccine, or once, we get into maybe the summer or the spring of 2021, are people going to start going to the cinema? So if they don't go bankrupt, is it a good time to get into that space? Are people going to start traveling for leisure again? It's hard to make a call on that. I can tell you the way that we think about it. This isn't an area that we want to invest in at the moment. It's not an overweight in our portfolios at all. These are some of the areas that are more volatile. But you're absolutely right. I mean, if you get a vaccine, if things turn around and come back to normal, those parts of the markets are going to come back very, very quickly. But the way that we think about this is that we want to have high returns and low volatility, and that's what we want to give our clients. So essentially, we want to be able to participate in the upside, but we don't want to take a lot of speculative risk. We're not going to speculate on the path of the virus, the vaccine, or even how effective that vaccine will be and how many people will take it. These are questions beyond what we want to do as investors for our clients. What we want to be able to do is really break down the risks of where we think we have an edge in what we know and what our credit research is telling us, and also what our macro thinking is telling us. It's very important. Most important thing to look at right now is the value of the dollar. If you look at the dollar, which we expect to go weaker, that to us is the biggest macro signal that we're getting. That should be good for all assets. We think equity, as well as credit, high yield. That's a barometer for us. Jim, the dollar will get weaker until when? Is there what's a catalyst for higher dollar?
So the catalyst for a higher dollar, it's very connected to the level of real yields, right? So if you look at 10-year tip yields or inflation expectations, I should say. So essentially what we need to start to see is with all of the fiscal stimulus and monetary policy stimulus, a weaker dollar should start to bring about higher economic activity. So what actually drives this essentially is that real yields start to move lower. So if the Fed is effectively keeping nominal 10-year Treasury yields around 70 basis points through quantitative easing, but they keep putting in more and more and more stimulus, essentially what ends up happening is real yields fall. As real yields fall, the dollar starts to devalue. So the key metric here is that real yield level. And what we would expect is that with fiscal stimulus, with even the Fed continuing to say, look, even if we have a good, strong year in 2021, don't expect us to hike interest rates. So inflation expectations will rise. As they do, the dollar should start to fall in value. As the dollar falls in value, that's part of, exports, the U.S. exports, can help that sector and, and essentially help economic growth in the U.S. And I expect, and I would suspect that the dollar is probably about 15% overvalued. So if you look at the dollar index, the DXY index, the last time that real yields, tip yields, were at these levels at about minus 94 basis points, the dollar index was about 15 to 20% lower in value. So the dollar can fall substantially from here, which should be an easing of financial conditions, as the Fed would put it, and that should be broadly supportive of riskier assets. So that's also critical, and I think that's coming. And I think that we need to, be wary of that. Even though we see some volatility right now, we think this is an opportunity to start to get invested. Be very selective, though.
Thank you so much, Jim Caron there of Morgan Stanley Investment Management. Now, let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Tom, health briefings have offered false or misleading information about how President Trump is being treated for the coronavirus. That's raised questions about his condition. One doctor says the president could leave the military hospital in Maryland today. Still, another disclosed that the president had received supplemental oxygen, plus he's being treated with a drug that is usually used for more severely ill patients. Meanwhile, President Trump paid a surprise visit to supporters of his who had gathered outside. He left the hospital to visit them. Video showed the president being driven in an SUV whilst he wore a mask. And the mayor of New York City will close businesses and schools in 9 neighborhoods because of a rise in coronavirus infections. Bill de Blasio says the school closures in parts of Brooklyn and Queens will start Wednesday for an initial period of 2 weeks, and they could be extended. And it's a grim milestone for California. Wildfires there have burned a record 4 million acres since the start of the year. That's more land than was blackened the previous 3 years. Combined fires in California have killed 31 people and destroyed more than 8,400 homes and buildings. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom Francine.
Ritika, thank you so much. As we see Bristol Myers with an acquisition this morning of something very specific to heart muscle, we're going to continue forward this discussion on smaller biotech. Mr. Cohen, Mark Cohen will join us with C4 Therapeutics, their co-founder. Stay with us. This is Bloomberg Futures Up 20.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate and ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Good morning, everyone. Bloomberg surveillance, an eventful day as well. An ill president that is really front and center. Francie in the Quad in London. I'm Tom Keene in New York. We're going to digress right now and wander into the technology space of Bloomberg LP. It is something that Bloomberg has been very much committed to, and we get fortunate with the news this morning that Bristol Myers will take out a small San Francisco shop, expert in muscle fiber, and this has to do with the core science, the foundations of all the stuff that we talk about day to day, of protein and inhibiting bad proteins. So we're going to get a little narrow here in a time of coronavirus, in a time where the president is ill. Mark Cohen joins us with C4 Therapeutics, their co-founder, executive chairman, and of course familiar to anyone in cancer from his work at Dana-Farber in Boston over the years. Mark Cohen, thrilled to have you with us. Congratulations on the financials of C4. I want to talk about the science right now, the mad dash to inhibit proteins. What is the new there on this day where we have Nobel Prizes on hepatitis C?
First of all, thank you for having me. Good morning. This is a very exciting time in the space. $3.5 billion has been invested in targeted protein degradation in a very short period of time. And this targeted protein degradation is a real paradigm shift in medicine. It's an exciting new space because it has the potential to go after diseases that have no options or limited therapeutic options. It's a real breakthrough and could be a pillar in medicine in the coming years.
What is the narrowness, and I mean that in a constructive way, of C4? As myocardia is expert on the unique muscle tissue of the cardiac system, what is your narrowness in protein inhibition?
So our focus, and the focus of this entire field, is about identifying disease-causing proteins and leveraging the body's natural innate capabilities to destroy them quickly. And that's in contrast to many of the medicines today that are inhibitors that basically just seek to have stasis. And so what we do is we leverage our body's natural capability to destroy them quickly and to essentially remove these diseases or basically destroy these diseases from our bodies.
Mark, does COVID-19 change anything for a company like C4 Therapeutics? Is it easier to get funding or easier to people to buy into it because, you know, there's a lot of focus and spotlight on biotech? Or is it more difficult because people would rather, you know, put money to try and find a vaccine?
I think it actually helps a lot. I think that it draws attention to the fact that this is a space that can have immense therapeutic benefits for people, and virology, in this case COVID-19, is definitely an area where protein degradation can be applied, and it's still early days for that, but it can move pretty quickly, and so I think it's a huge benefit for the space.
I mean, how difficult is it when you look at your industry in general to bet on the right company, given, you know, trials are difficult, you could have great news one day and really bad news the next day?
Well, as far as targeted protein degradation is concerned, this is a space where you're going to have many different companies that I believe that are going to be successful, and so I think it's just a question time, and this is not long time. I think in the next couple of years, you're going to see quite a few new drugs based on this new modality.
We just saw a huge deal, Bristol Myocardia, which really has nothing to do with what you do, apart from the fact that it's in the health space. Are we going to see a lot more M&A, again, as the pandemic has put a new focus on this industry?
I believe so. I think that I believe that there's going to be a fair amount of M&A as you see some of these new technologies come to the forefront, and the larger pharmaceutical companies are going to want to bring those in-house. And as far as targeted protein degradation is concerned, I believe the next couple of years, when this gets proven out in patients, and you're starting to see a number of clinical trials that are going to be starting next year and the year after, we're going to have, for example, 4 different molecules or medicines that are going to be in clinical trials by the end of 2022. And that's pretty significant. So I expect that in the next couple of years, you're going to see large pharma trying to bring that in-house.
Mark, who's your biggest competitor? Is it people in the U.S. and Europe, or is it someone in China?
I would say that I don't view these other companies that are in the space as competitors. I believe it's similar to, for example, antibodies or inhibitor type drug companies. We're all fighting disease. The only area where we would compete is if we're competing against a disease-specific area. But right now, I believe that we're all moving the industry forward together.
Thank you so much, Mark Cohen, there, C4 Therapeutics co-founder and executive chairman. Up next, we track COVID-19 with Joshua Sharfstein. He's Johns Hopkins Bloomberg School of Public Health Vice Dean. That's coming up shortly, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
At this time, the team and I are extremely happy with the progress the President has made. Thursday, he had a mild cough and some nasal congestion and fatigue, all of which are now resolving and improving. Right now, he is not on oxygen.
I know you keep saying right now, but should we read into the fact that he had been previously?
Yesterday and today, he was not on oxygen.
So he has not been on it during his COVID treatment?
He's not on oxygen right now.
Well, that was White House physician Dr. Sean Conley speaking on President Trump's condition. Joining us now is Dr. Joshua Sharfstein, Johns Hopkins Vice Dean for Public Health Practice at the Bloomberg School of Public Health. Dr. Sharfstein, given the medicine that actually President Trump is being given, administered, and some of the symptoms, despite all of the changing ideas and actually changing accounts of what exactly is going on, what do you think you know about the President's update?
It's really hard to say. I mean, unfortunately, when you have a, physician who's not really telling the whole story or really misleading people, which is what he was doing this weekend, it's really hard to say. If in fact he got steroids and the antibody treatment and remdesivir, his physicians were quite worried about him, and they really threw a lot of stuff at him because particularly steroids are for pretty severely affected individuals. So I think there's reason to be concerned until we really know that he's out of the woods, and it's probably going to be a few more days to know that for sure. I don't know if you can rely on what's being said about him, unfortunately.
I mean, there have been a number of people infected, we understand, at the same event at the White House. What has that experience taught us about how the virus moves?
Well, I think it's really important to realize that it looks like the White House was the center of the outbreak. The White House itself at a reception for the nominated, judge for the Supreme Court. And there was a huge reception inside, and people were exposed. And, we know if you are close to people with hot masks in an indoor environment, that is the favorite environment for the virus to spread. And it looks like that's what happened. And there's so many people infected there. Pretty much everyone there really should be quarantining still, because they could still get infected. This has not played itself out, because there are likely to be, waves of infection unless people really, cool it and quarantine themselves.
There are also, reports that the New York City mayor is trying to reverse a course to actually try and, close schools and close businesses because he's worried about a number of cases really surging. How does one handle New York City? Well,
it reflects that the virus is kind of surging quite a lot around the country. I think that having a targeted approach for certain neighborhoods can make sense, but they're going to have to watch really carefully to see if it's working. There's a lot of understanding in New York. I think what really has gotten the White House in trouble is that people didn't really think that the virus, the laws of the virus applied to them, that there was some sort of White House exception, which is obviously not true. But I think people in New York know how serious this can get, and I think it's quite possible they'll be able to get control of it.
Thank you so much, Dr. Joshua Sharfstein there of Johns Hopkins, and be sure to check out VRUS Go on the Bloomberg for the latest information. You can also tune in every day for our exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. Now, coming up next, join Tom Keene, Jonathan Farron, Lisa Abramovitz for more Bloomberg surveillance, also simulcast on radio and on TV. I'm looking at what's going on with markets. A lot of the focus on markets is actually on President Trump recuperating. There are still many questions about his health, many questions about his campaign. But overall, here in Europe and also pre-market trading in the U.S. are up. Consumer companies and banks leading this broad advance. Treasuries and yen steady. This is Bloomberg.
like the fact that they don't know what their next 3-6 months are going to be like.
It is possible for unemployment to rise and for GDP to grow at the same time.
There has to be more fiscal stimulus. The markets are expecting it.
Markets are going to force the government to act here.
The Fed is going to have to be highly accommodative for many, many years.
We are in a low interest rate world, probably permanently.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York and London for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. With equity futures up 23, we advanced 0.7% this Monday morning. Tom Keene, the President of the United States, recuperating.
He's recuperating 9 tweets in the last 39 minutes. Let me look down. Yeah, we're still at 9 tweets, John, so I guess that's one sense of his activity, all of the effort back and forth over the weekend. John, I would really focus at the immediacy of the calendar forward. We've got the vice presidential debate. I believe it's on Wednesday, 10 days out to a presidential debate, I believe still scheduled, I can say, and then on to an election.
You can say so far.
So far, and then 29 days we are to the election.
53.39. I think they're the two numbers this morning, Tom, that gets everyone's attention.
39
the most recent
particularly.
Wall Street Journal NBC poll. The national polling not looking good for the President of the United States. And what you see playing out on Twitter right now, Tom Keene, that is a campaign for the President right now on Twitter, knowing what these polls look like at the moment.
Make it around 10. We got a new tweet. Best Veterans Affairs ever, 91%. Best Virginia ever, 91% approval rating. Vote, exclamation. Thank you for getting up, Riley, so quickly. These are short bursts of tweets. And I guess the President, John, just showing the action. He wants to come out of Walter Reed this morning.
And hit the campaign trail, virtually speaking. Lisa Abramowitz, we've got to hit the economic data as well.
Yeah, and this was overshadowed by Friday's news of President Trump. But to me, really interesting to see the momentum, how much it's slowing. We saw signs of that in the jobs report on Friday. Today, we'll get a reading on U.S. September services and composite PMIs at 9:45, another reading on ISM reading at 10 a.m. You could see a huge recovery, and yet the momentum is certainly slowing. Then also, we're going to be hearing from Chicago Fed's Charlie Evans. He's going to be speaking at the 62nd Annual National Association of Business Economics meeting. Will he walk back the messiness that he caused last month when he talked about possibly hiking rates before the Fed met its inflation target? And then later today, and this will be interesting speaking to President Trump's tweets, Joe Biden is going to be holding a town hall meeting in Miami hosted by NBC's Lester Holt. Very interesting to see, John, how much focus is going to be on his tax plan, given that he does plan to raise corporate taxes, especially as President Trump tries to bring that to the fore.
Dare I say, I think we heard more from the President of the United States from hospital than we did from the former VP Joe Biden over the weekend. Let's get to the price action this Monday morning, shaping up as follows. Last week was absolutely fascinating. Equity futures this morning bounced back up 23. We advanced 0.7%. In the bond market, yields up a basis point to 0.71%. Tom Keene, stocks delivered a week of gains last week. The 10-year yield actually ended the week higher, not lower, and credit spreads didn't widen once. Monday through Friday on high yield. I actually found last week fascinating.
Yeah, last week was fascinating. I looked at a couple things. John, what I really looked at was the Bloomberg Dollar Index, which is absolutely smack dab in the middle of its trend, beautifully sitting, elegantly sitting on one of the moving averages I use. I mean, it's exactly as you describe, a muddle in range bound. But John, will you explain to me the 30-year bond? I said to Jim Caron, I said, oh, the humanity, 1.52%.
Yields up 3 basis points, steeper curve on a session, Tom. We'll talk about it a little bit later in the ad. Joining us now in the equity market, Steve Cheveron, Federated Hermes Portfolio Manager. Steve, so many things to process. Can you walk me through how you're processing things this Monday morning?
Yeah, you got to be careful trying to follow the latest data point. It's like trying to navigate an ocean looking at the next wave right now. And so you need something to look out to. You need something that's your kind of guidepost. And for us, that guidepost is the set of circumstances that we think are going to be in place, towards the back half of the first quarter of next year. And we think by that date, you'll have a vaccine of some sort, a president of some kind. We think you'll have an economic recovery that's almost a year old. We think we'll have a Fed that's still doing nothing. We think we will have a fiscal stimulus package by that point, and we think that you're going to be up against very easy year-over-year earnings comparisons. And so I think when you look at the risk-on appetite of the market last week, I think that's what it's looking towards.
Steve, what is the appetite of C-class officers to merge? We have this Bristol Myers Biotech. I know it's a small company, 300 employees, Myocardics out in San Francisco. But what is the urge to consolidate right now across the big cap space?
Yeah, I think what you're seeing is that we've already separated the winners from the losers. But amongst who's left in the wake of this crisis, those companies that are in a strong position, that have good balance sheets, that have had good cash flows, they now have the ability to lock in competitive advantages by taking out weaker competitors. I think you're going to see a lot of that over the next couple of years. And so the game, I think from a stock selection perspective, when you're looking at the weaker players, is who's going to die and who's going to get purchased. And I think that's going to be a big theme now for the next couple of years.
Right now, a big theme as President Trump keeps tweeting, Steve, is taxes. He cut corporate taxes to 21% from 28%. Joe Biden proposing to bring them back up to 28% from 21%. A number of estimates say that will materially cut profitability for a number of companies, including big tech. How much are you modeling for this?
Less than the street. I think the street in general has about a 10 to 15% earnings growth hit from Joe Biden's tax policies. But I think what they forget is that he's not raising taxes in order to cut the deficit. He's raising taxes in order to fund more spending. So I think there are some offsetting spending initiatives. So we think it's more like a 5 to 10% hit. Outside of corporate taxes, though, we think the biggest tax change that could roil markets at the end of the year is actually the change on capital gains taxes. If the top income tax earners are going to pay a 40% capital gains tax going forward instead of a 20% gains tax this year, we think you're going to see folks really try to harvest those gains in 2020, and that could cause a late year sell-off in tech and kind of high-flying growth. So that's something that we've got our eye on pretty closely.
Steve, where do the fiscal talks plan out right now fit into all of this?
Look, I mean, I think the big companies that have threatened furloughs have kind of put a renewed sense of urgency behind this. But ultimately, we're going to get stimulus, John. It's either going to be before the election in some bipartisan deal. If it's not, it'll be in the lame duck when no one has any political calculations that they need to concern themselves with. And if not then, when the new Congress is seated, we're going to get one. So I think that part's coming. But I think the stimulus that the economy needs more than anything else is to keep the virus under control to allow the economy to reopen. With all of the stimulus that's been put in the system, economy open, you're going to have tinder. If we have to close back down, like it's happening in certain parts of New York, that's pretty restrictive on growth. So I think that's even more important than what you get out of Washington.
Steve Shiver, on the paragraph for me in my weekend reading was Michael Feroli at J.P. Morgan. In the middle of old folks, a 12, 13-page report is a stunning paragraph on the partition between goods and service sector. Can you construct a portfolio around that? I mean, are you guys weighted to goods producing because their inflation will be stable versus the disinflation of service sector? How does that cut?
Yeah, when we're thinking about it, that's a great question.
It's my only good for the week. You get it.
No, we've never really broken it down that way. But what we are looking at right now, and I'll tell you along these lines, is, as we go into the back half of the year, you have some of those potential tax changes. We think that we're getting ourselves on the other side of COVID, in the first quarter of next year, or at least that's our hope. We've gone overweight both goods producing and service sectors that have gotten beaten up. We've gone overweight sectors like consumer services. Yeah, the hotels, the cruise lines, the casinos. We've gone overweight also some of the goods producing, industry groups like materials and like consumer durables. I think it's a scenario where right now, if we end up with a Biden victory and a vaccine, we think that will be the impetus for a very big rotation towards those cyclicals and away from some of the defensive growth names for the tax reasons and because we think we've got an economic recovery that's self-sustaining at this point. Even the jobs number, on Friday, if you strip out what happened with the government workers, the private economy added jobs at a very strong clip. That was really more of a story of schools not reopening than it was of the private economy rolling over. We think this recovery is actually self-sustaining.
Just real quick here, Steve, I'm wondering when you expect the vaccine to come out and be in distribution in full in order for your prophecy to come true.
See, I'll answer it, and then I'll tell you why I don't think it's about when it's in distribution. Look, I think that it's not likely to be in distribution until end of the first quarter, middle of next year, et cetera. I think that's right. But I think psychologically, knowing that we have something that works is going to be very important. Think about it. If you're a restaurant and you've scrapped yourself through this summer with outdoor dining and takeout, you know you're going to be in for a difficult winter. If you have a vaccine that you know is coming, you're going to beg, borrow, and steal to try to stay open, and that's going to preserve jobs. If you have no hope that things are going to get better, come springtime, why not shut down today? Why lose money for the next 6 months? And so I think it's really about the announcement that we have science that we know is going to work, and then I think we can bridge the gap with a stimulus bill or with people, trying to hold on until it's distributed. But we're under no illusions that, we're all going to take a magic pill in November and this is going to be open, or this is going to be over. We don't think that's it at all. We think that the vaccine, along with, Regeneron's antibodies and Gilead's remdesivir and the dexamethasone are putting together a mosaic where we can put this thing in a box.
As you know, Steve, many companies the last 7 months, they've been holding on and holding on. Steve, great to catch up. Steve Cheverone from Federated Investors. Thank you, sir. Equity futures are positive. Interesting move at the long end of the yield curve. Tom picking up on this. The 30-year yields up by around about 3 basis points to 1.52%. Tom, it's going to be quite interesting to see how the long end lines up with the recent polling over the next couple of days and the next set of polling. So the polling we're seeing and talking about this morning, that's the post-debate polling. The post-COVID positive read for the President of the United States, that polling in the coming days is going to be interesting.
Martin Schenker was brilliant. I think it was 2 hours ago on this, our chief content officer. And John Farrell, what he emphasizes, these are national polls, and that's all great, except this is not a national election. It's about X number of states, and I'm a lot more interested in the dynamics of those state polls here in the coming 3 days.
We'll catch up with Marty in the coming 20 minutes, Tom. Looking forward to that chat. Michael Cloherty joining us as well. UBS head of US rate strategy. A little bit later right here on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. This is Bloomberg Surveillance.
With First Word News, I'm Rishka Gupta. There's confusion over how President Trump is being treated for the coronavirus. In public, his doctors remain upbeat. One says the president could be released today from the military hospital in Maryland, where he's been since Friday night. Still, another one said the president has been given supplemental oxygen and he has received medication typically used in more severely ill patients. Meanwhile, the president unexpectedly left the hospital to greet supporters who had assembled. He waved to them from his motorcade in a bid to demonstrate strength. Joe Biden leads President Trump by 14 percentage points in the new Wall Street Journal NBC News poll. Biden's 53-39 lead is his biggest of the campaign. Voters were polled after Tuesday's debate, but before the president was hospitalized for the coronavirus. And in the UK, Prime Minister Boris Johnson is warning the public that a, quote, very tough winter lies ahead. Johnson said he accepts that people are angry with the way he has handled the pandemic. He told the BBC that it's going to be a bumpy Christmas, and it may even be bumpy beyond that. And there's a huge deal in Big Pharma today. Bristol Myers Squibb has agreed to buy biotech firm MyoKardia for $13.1 billion in cash. That represents a 61% premium to the company's closing price on Friday. The deal will expand Bristol Myers' lineup of heart drugs. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's been a very interesting journey. I learned a lot about COVID. I learned it by really going to school. This is the real school. This isn't the let's read the book school. And I get it, and I understand it, and it's a very interesting thing, and I'm going to be letting you know about it.
The President of the United States, after the inconsistent messaging over the weekend about his health, appears to be recuperating. This market recuperating as well. Equity futures getting that predictable bounce. It materializes with equity futures up across the board here in the United States. Futures up 0.7%. Foreign exchange, weaker dollar, stronger euro. Euro dollar 117.55, and a lift on Treasury yields at the long end by about 3 basis points on a 30-year. On a 10-year, Tom Keene, up around a basis point to 0.71%.
I would suggest, John Farrow, that one of the books the people at Walter Reed have read is Flint's Principles of Virology. There's a little bit of book reading going on at the acclaimed Walter Reed Hospital. The data this morning is interesting, and around it is perhaps a celebration of a healthy president. We'll see how that news unfolds here across the morning. Right now, what's different from my last conversation with Martin Schenker, our Chief Content Officer, is, Marty, the president is using his best vehicle of communication. I think there's been 300 tweets this morning. What does it signal?
300, Tom, but there have been a number of them. Yep.
What's it signal?
Signals that he wants to display some normalcy, if you can call it that. What's normal in Trump's world is an interesting thought. But he is tweeting, and it was, when he was first diagnosed, he ceased tweeting for something like 36 hours. So that caused a lot of concern, I think.
Marty, it is a wide range of topics that the president addresses. In terms of, as John Farrow mentioned, his 39% polling, which is a stunning statistic a la Bob Dole from another time in place. What is the single issue to jumpstart the president's campaign?
Well, I really don't know. I think he's searching for that issue because nothing so far has worked for him. And I think what the polling, as John mentioned, the polling over the weekend, which was pre-diagnosis but post-debate, his performance at that debate clearly hurt him among voters in America.
Marty, just looking through the tweets, and there's always a risk that you overanalyze some of the tweets from the President of the United States, but there are about 15 of them, and they're on different topics, different themes. The strongest ever military, vote. Law and order, vote. Religious liberty, vote. So far, nothing on COVID-19. And isn't this the issue for this campaign now, Marty, that it's going to be very difficult to campaign on the other issues?
For sure. You know, the public has a strange way of deciding what is the issue as opposed to the candidates themselves. And this virus overtakes everything, and his record on the virus is not great, as many of us understand. And now that he has the virus, and he is trying desperately to talk about anything else, but it doesn't seem to be working.
Marty, how do you think President Trump's joyride, I should say, outside of Walter Reed Hospital over the weekend to visit his supporters from a closed car, how do you think that'll play with his supporters?
Well, I think, the supporters out in the street were probably thrilled to see him, but he's under tremendous criticism from the medical community and others for putting the Secret Service men in that vehicle at risk because he's clearly infectious. And even if you're wearing masks, that is a hermetically sealed car, and he could have endangered those Secret Service agents.
Marty, questions still remain about the protocol. and whether it was followed, and when they found out about the positive test of Hope Hicks. And let's be clear, it was our very own Jennifer Jacobs that broke that news. And if she hadn't, Marty, who knows how this story would have rolled out into the weekend. Marty, what don't we know, and what do we need to know about what happened last week?
Well, one of the most important things, and we're not getting any clarity at all, is when Donald Trump last week was tested and what those test results showed. For instance, before he went on Thursday to his fundraiser in Bedminster, he knew Hope Hicks had tested positive, but did he himself test positive at that point? The White House is not giving any clarity whatsoever on when Donald Trump was tested during last week, and it raises the question, how regularly is he tested generally? Because if he was tested positive and went to these events knowing that, it's a serious breach.
Marty, you and I are of a certain vintage where we have been hermetically sealed since February. And, you know, full disclosure, folks, we're very fortunate to work for Bloomberg, which has really done a great job in this within our headquarters here at 731 and Queen Victoria Street and the rest. Marty, we understand that age issue. If there are X number of 70-year-olds ill off of this shenanigans, that's bad odds for one of them, isn't it?
It is. As we know, people over 70 are at a higher risk. And it's also interesting to note that many of these COVID patients show improving signs and then days later essentially collapse. And that is why this whole notion of Donald Trump being released from the hospital today seems like a fantasy to me, that doctors would allow that to happen.
Well, Marty, I think we all wish him the best. Marty, fantastic to catch up with you, sir. Marty Schenker there of Bloomberg News. Tom, certainly some problems for the campaign. You mentioned the amount of people that have actually tested positive now. Within the campaign, let's just think about this. His campaign manager also infected by all of this, Tom. We know that the First Lady, of course, infected by COVID. His debate coach, the former New Jersey governor, Chris Christie as well. Tom, you just go round the table there. If you think about the whole campaign strategy of last week going into that debate, there are a lot of key personnel now facing a little bit of trouble through the next couple of weeks.
Yeah, Hans Nichols on Axios with his Sunday writing, John, I think really summarizes well. There's a host of issues for a president desperate to jumpstart, and I'll be honest, it's not something to talk about with such an ill president, but money may be an issue. That final dash, the millions needed to do the final messaging, I wonder if it's there.
Well, speaking of money, Tom, can you imagine being at that fundraiser in Bedminster, New Jersey? Now the news has essentially come out. It was the White House Chief of Staff, Mark Meadows, that gave you the timeline that Hope Hicks had tested positive, and they knew about that positive test before they left to Bedminster, New Jersey. So the President of the United States arrived there knowing that he had been exposed to coronavirus. Tom, the amount of questions that still haven't been answered regarding last week, I think, are key. And it's key for the administration's messaging around the protocols and what everyday Americans should do if they are exposed to COVID-19, and the inconsistency of what the president and this administration did last week when they were.
I mean, I don't know what it was like with Prime Minister Johnson, but my recollection, John Farrow, is it was a lot cleaner and clearer than this, and we know how serious he was. I believe it was St. Stephen's.
Well, I think, Tom, I think, to be fair, Tom, there are some similarities here that this government tried to put a picture and a show of strength for the Prime Minister as well. And then, obviously, things got a little bit dicey in the weeks after. We hope, of course, that's not the path ahead for the president.
We're at the half-hour mark. We're at half-hour mark. We haven't even mentioned Aston Villa.
I know what's coming. That's not how you pronounce it. And you know that. That's next, right here on Bloomberg.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
From New York and London, for our audience worldwide, this is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Your price action shaping up as follows. 2 hours out from the opening bell, with equity futures positive nicely on the S&P, up by 22. We advanced 0.6%. Avoiding a political crisis, seemingly, in America has its merits in financial markets. Yields up a single basis point, a 10-year, dollar weaker through most of G10, euro dollar 117.53. But Tom, that's not the only story this morning. Some PMI data out of Europe, weak in Spain, weak in France. Some of the restrictions coming through in Paris, France set to close bars, I think, as soon as Tuesday night. In the United States, there are these 9 zip codes in New York City, Tom, getting a lot of attention. There will be some tighter restrictions, or at least there will be set to be some tighter restrictions there as well. Just getting deeper into winter, facing some more challenges, Tom.
John, yes, and the president not tweeting out right now for the last 15 minutes. Maybe John is having breakfast at the Warrior Cafe at Walter Reed. John, it is breakfast and dinner, including daily specials, a grilled salad bar, and pizza. So
wait,
possibly,
what? Are you really looking
shock
that
me.
up?
It does not. Why? It shocks you?
Well,
it shocks you that Tom has gone to the bar menu just quickly
honestly,
to see if they serve alcohol?
At the hospital?
He's at the Warrior Bar in the Tranquility Hall of Walter Reed, and that's where we can report that right now. John, to your point on the president and the mix of the news and all, to me, John, the most important paragraph of the weekend was Ferroli over at J.P. Morgan splitting that disinflation dynamic, which you mentioned in Europe, between service sector and goods producing sector. To me, John, that's the mystery through October and in November in the bond market.
Well, the mystery is on output there as well, Tom. For the service sector, much, much harder to turn that back on and push consumers to carry on engaging with the service sector. For the goods sector, flick a switch, it got hit hardest in the shutdown, it reopened quicker, and it bounced back faster as well. But without the support of consumers, Tom, this economy is all linked at the end of the day. You're not going to get one side of the economy continue to do well if the other side is still sluggish.
Let's frame full faith and credit now to bring in our next guest. 1.51% in the 30-year bond. That's an extraordinary 11 basis point move. Higher yields, lower bond prices over the last, say, week. The 10-year yield 0.71%. John's been great about bracketing that. I'm going to call that, John, at the upper end of the range. And the 2-year yield 0.1289. Like a rock, somebody's got a foot on it. With us now, Michael Clardy with UBS, head of U.S. rate strategies. Let's start with that idea, Michael Clardy. Who has their foot on the 2-year yield?
Well, the Fed does. So, with their guidance, they're sort of suggesting that they're going to keep rates low for a long time. They'll continue to hold this front end down. I think when you look at the bond market, you want to look at the Fed's actions in 2 different parts of the curve. So the front of the curve is all about what they're going to tell us they're going to do with the policy rate. The back of the curve is sort of QE driven, but the Treasury is issuing a lot more at the back of the curve than the Fed's buying.
So let's talk about the issuance here. Issuance is a flood of paper onto the market. And to be clear, that means yield up, price down. How much of that movement would you calculate?
So what's been surprising is how well we've been able to handle the supply so far. That said, it's just relentless. So if we look, again, only focusing on the long end, front end supply, during Operation Twist, the Fed sold $630 billion of 3-year and shorter treasuries, and it barely moved yields at all. So long end is where the supply matters. 7-year and longer auctions between March and October is going to be up 84%. So even though the Fed's buying, it's peanuts relative to what the Treasury is issuing out there. We think we're just going to see this steady weight of supply dragging yields a bit higher.
Michael, not a trick question, a genuine curiosity from me. What's the history of supply mattering in the Treasury market?
So generally, it matters at extremes. So it mattered a lot when the U.S. ran a surplus for 4 years, back around the turn of the century. So back then, we saw 2s 10s invert 50 basis points, 2s 10s swaps stayed positive that whole time. So you had this incredible richness of long treasuries back then. It mattered a little bit coming out of the last crisis when we saw, a lot. The Treasury initially issued lots of bills to handle the jump in supply. As they termed it out, it really did offset some of the effects of QE. And that's what we think right here is the issuance matters more than QE right now. The Fed would have to upsize enormously to offset this supply.
Well, let me throw this in there, Michael. What matters ultimately more, the outlook for inflation or the outlook for supply at the long end?
Right. So I guess within the inflation will set a fundamental level for bond yields. Supply can, create some significant swings within that. So we think we're so low right now, there's just not much upside. I mean, we've seen a lot. We saw equities move pretty substantially in the last month. 10-year yields stayed in a 6 basis point range the whole month. So, you're just not seeing much of a hedge benefit from treasuries at these levels. That means there's less fundamental value in treasuries. Treasuries underperform corporates the vast majority of the time. The only reason you own a treasury is because when they outperform corporates is when the equity market gets hurt. When you lose some of that hedge value, that diversification value, treasury is fundamentally worth less.
This is such an important point, and it's one that a lot of people are highlighting this morning, saying that treasuries can no longer be a hedge, right? They no longer can be a ballast to your 60-40 portfolio. Do you think that it is too soon to ring the death toll for bonds acting as this ballast, or do you think that this is an accurate characterization?
I think at these yield levels, it's accurate. We back up a little bit in yields, and I think the behavior will come back. But, with U.S. rates pinned at 0 on the front end, the Fed has repeatedly said they're not going to go through 0. If they do go through 0, it threatens disruptions in the repo market. When Uncle Sam has $20 trillion of debt to roll over, the last thing you want to do is interfere with the funding of those treasuries. So, at these yield levels, I don't think there's much benefit. If we cheapen a little bit, I do think it comes back.
All right. So can you give us a sense of where you start seeing value again? Just to give you a perspective, the 30-year Treasury yield right now, the highest since June at 1.51%.
Yeah, I think we need to sort of back up another 20 bips before you get a little more interested in them, before we get some of that hedge value back in the equation.
Worth pointing out, Tom, year to date, long treasuries, TLT, the ETF, up 20% through 2020. I think the key clause in what Michael is pushing right now is just the idea that at these levels, they don't present the same opportunity they did this year. And let's think about how many people came on the program last year saying that the next test for treasuries, the budget deficit, all those bad things. And what happened to treasuries? When things hit the fan, they rallied, and they rallied aggressively.
Right. I mean, this is really important. Michael Clarity, very quickly here, I just think it's so important. The great measurement of a bond bear market is when your clients get 3 months in a row statements of their for sure like a rock bond portfolio going down in price. Where's that equivalent 10-year yield now? I mean, on a full faith and credit 10-year, where does the pain really click in?
Well, again, that's one of the issues is at these yield levels, I'm not seeing much income. So, normally you could have prices fall a little bit, but it gets offset by the income. You're getting these yield levels. My income's so small that, again, it all depends on distribution, but we get up, we sort of sell off 5 basis points a month more than gets you there into negative territory.
Wow.
Michael, would you still call the US the high yielder compared to what's playing out in Europe at the moment? Given where we are on a 10-year in Germany, negative 54 basis points. For a foreign investor right now, from an international perspective, looking to the United States, just how attractive are things?
That actually, there's still some value there. What we've seen is some of the FX hedging costs have actually come down recently. There seems to be a lot of street balance sheet out there right now that's reduced those costs. So there is a little bit of value for some of those foreign investors, but, again, not exactly a jump up and down sort of price.
Michael, great to catch up, sir. Thank you. Michael Clottey there of UBS on this rates market. Mentioned the bond market, front end, 2-year, your yield, negative 72 basis points. Tom, that is far below the depot rate at the ECB. Just gives you an idea of how much tension there is across Europe after the happy talk of the last several months. That's how the bond market's priced.
I looked at an Apple piece I always look at. I just find it quickly under DDIS, John, the Swiss franc denominated Apple debt. I believe it's out 9 or 10 years. You've made 5 big figures in price, even with an itty-bitty negative yield just since March.
To be clear on high yield through last week, Lisa, with all the risks on the horizon, even on Friday, I think in Friday's session, high yield spreads didn't even widen.
Yeah,
just think about that.
Yeah,
and to Michael's point on treasuries as well, yields actually ended Friday higher, not lower, even with what was playing out down in Washington.
Yeah, it's really hard to understand all the crosswinds. People are talking about how this definitely heralds the death of the 60-40 portfolio. I've gotten about 10 notes in my inbox over the past 4 days as a result of what happened with treasuries, with yields moving up, price down, even as stocks sold off. I will say, in the high yield space, though, John, there were a lot of cross currents there, right? I mean, there was the oil price that was falling out of bed, and you have increase in bankruptcies there, while you have some stabilization in other sectors. So a lot of cross currents, and I gotta say, there's a credibility gap right now that I'm feeling and I'm struggling with.
John,
and yes, go ahead, Tom.
Do you see, John, how she gets 10 people emailing her in? I wish somebody would just email me once.
You know what? Someone emailed into you. Someone emailed into both of you.
Oh, he gets.
Okay, I'm placing a new order to sell short Japanese yen at 105.637. New order placed to sell short Japanese yen at 105.637.
Can you explain Aston Villa beating Liverpool?
Okay, I had a feeling we'd go there. So deep breath.
No, but really, why?
Aston Villa.
Oh, Villa. I thought of Bob Villa, the home fixer guy.
You've got this. It's not the Spanish twist on the name. Just Aston Villa.
Okay.
Now, what's the question? We've got the name right. What's the question?
How can they beat someone as dominant as Liverpool? How does that happen?
They fell apart. Everything went right for Villa and everything went wrong for Liverpool. I thought it was amazing. And Liverpool just dropped their heads, Tom. Just a real psychological element to all of that. I thought it was absolutely dominant. And do you know what I really loved about it? Villa was so much better than Liverpool that everyone forgot what Spurs had done just a couple of hours before.
They won.
We don't have to talk about it. Coming up, David Riley, Blue Bay Asset Management Chief Investment Strategist on anything but Tom's Tots. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Health briefings have offered false or misleading information about how President Trump is being treated for the coronavirus. That's raised questions about his condition. One doctor says the president could leave the military hospital in Maryland today. Still, another disclosed that the president had received supplemental oxygen. Plus, he's being treated with a drug that is usually used for more severely ill patients. The Republican plan to confirm Supreme Court nominee Amy Coney Barrett by Election Day is now in peril. 3 Republican senators have tested positive for the coronavirus in the past few days, and at least 8 others are known to have had direct exposure. Majority Leader Mitch McConnell's narrow margin for confirming Barrett would evaporate if just 3 Republicans were unable to vote. The mayor of New York City will close businesses and schools in 9 neighborhoods because of a rise in coronavirus infections. Bill de Blasio says the school closures in parts of Brooklyn and Queens will start Wednesday for an initial period of 2 weeks. They could then be extended. And it's a grim milestone for California, where wildfires there have burned a record 4 million acres since the start of the year. That's more land than was blackened the previous 3 years combined. Fires in California have killed 31 people and destroyed more than 8,400 homes and buildings. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
What would you say are the leadership qualities that you brought to the table or that you most admire?
I don't always have to be the smartest person in the room. I know collectively what a team needs, and I love having really great debates.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
We're still apart on our asks. There, in our judgment,
asking for a lot of extraneous things that have nothing to do with COVID and the economy. The split has narrowed somewhat, but it's still wide enough.
Larry Kudlow, National Economic Council Director, live on Bloomberg TV and radio. This is Bloomberg Surveillance. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro, getting you prepared for the opening bell around about 1 hour and 50 minutes away in New York this morning. Good morning to you all. Equity futures shaping up as follows on the S&P 500. We are positive, firmer, higher by 0.7%. Call it 0.75% higher, up 25 on the S&P. In foreign exchange, nicely stronger euro, even with some mixed data over on the continent. We can talk about that later. Euro dollar 117.65 and yields higher by a single basis point on a 10-year to 0.7121%. To 4 digits for you then, Tom Keene, on a 10-year. Tom, just briefly on the fiscal talks down in D.C.
Please.
Speaking to Larry Kudlow, the administration's number in and around $1.5 trillion. We know House Democrats passed the bill at $2.2 trillion. We know that Senate Republicans considered a bill of in and around $650 billion. So my question for this week, Tom, is the biggest gap between Secretary Mnuchin and this administration with them and Democrats, or with them and their own party?
Right.
Because these negotiations aren't just between House Democrats and this administration. Senate Republicans have a big role too.
John, nicely laid out there in terms of the dollar numbers. I couldn't have done that, but what I can do is give you one single statistic. 39%. How does this debate change today with the president's polling, again, pre-viral infection?
Well, the president's trying to hit the ground running, isn't he? And I think that's what you're seeing playing out on Twitter this morning, Tom. A show of strength. At least they're trying to display a show of strength with a drive-by yesterday afternoon and this morning, getting straight on it, campaigning for votes. Those polls, Tom, look, they are national polls, and we know the nuances of a handful of states and how much those states matter. But those national polls do not look pretty for that campaign.
Cameron Kreis of Bloomberg getting out front on this as only he can do with a terrific essay Friday and over the weekend on the polling around Prime Minister Johnson. Cameron, what did you learn in your study of the polling results around of leaders' serious infection?
Well, it didn't do a whole lot, to be honest with you. Mr. Johnson, as you may remember, announced that he'd contracted COVID on March 27th. And superficially looking at the polling results of the UK government, you can see that there was quite a nice improvement in UK polling or government polling numbers for March, but that all happened before Johnson announced that he'd had COVID. It kind of went sideways during the time in which he was suffering from the disease and kind of didn't really go anywhere until a couple of months later, and at which point it came sharply lower, which I think we can say had nothing to do whatsoever with his contraction of the disease. So obviously the United States is a different country from the United Kingdom, but I think it's probably fair to say that Mr. Johnson and Mr. Trump are both fairly divisive figures, so that there might be an analog here, and that would perhaps suggest that the hopes on the Republican side that there'll be a big wave of sympathy for Mr. Trump might not be rooted in fact.
Cameron, you were a trader for a long time. I'm looking at so many levels of uncertainty, but also a credibility gap. And this is what I was talking about earlier, because we have, for example, questions about the polls. We have questions about the state of President Trump's health, given the diverging messages coming out of his White House. And then we have the fiscal support coming out of Washington, D.C. Fool me once, saying that we're going to get it done. Shame on you. Fool me twice. Shame on me. Fool me 45,000 times, which seems to be this negotiation down in Washington, D.C. What is the market supposed to do with all of these uncertainties and, frankly, a lack of credibility with what a lot of these people are talking about in Washington?
Yeah, I think you can never underestimate the degree to which people will engage in sort of the willing suspension of disbelief. We saw that last year with the trade negotiations, or how many times did the equity market rally on the same headline that a phase one trade deal was getting closer and what have you, even though there was actually no news in the literal sense of it in these releases. I think there's a general sense that eventually we will get more stimulus, whether it happens this side of the election or not is perhaps more open for debate. I guess the other issue is if you do get a Democratic clean sweep, that would pave the way for a much larger dose of spending, perhaps with obviously an agenda attached to it in terms of the environment and the green stuff, Green New Deal and what have you. But I think that it's fair to say that even if we don't get a near-term deal, there's going to be enough noises that markets will look at it like they looked at the trade stuff last year. The one proviso I would raise is if you start to see a significant deterioration in the economic data without a deal, that's perhaps when that willing suspension of disbelief gets some cold water thrown into its face. But right there, we're not quite there yet.
Well, Cameron, let's talk about that. Just how cold is that water at the moment?
Well, yeah, I would say it's quite nice. It's like sort of the Atlantic in off the coast of the Carolinas in I don't know, maybe early September. You know, not quite as warm as you'd like, but it's still, you can still have a nice little paddle in it.
Yeah.
The payroll numbers last week, yeah, they were a little disappointing. It looks like there was a back to school element, but certainly the consumer remains relatively resilient, and that's been a surprising positive. Now, that's been mostly focused on the goods sector rather than the services sector, although obviously clearly at some point there's a supply issue with the services sector. If restaurants aren't available to eat in or bars are closed, you know, even if you want to spend the money, you can't. But to date, the data has been more resilient than I think most of us would have expected, say, 3 or 4 months ago, particularly in the context of reduced unemployment benefits. The issue is once the sort of executive order aspect of those benefits rolls off, and if and as we see the payroll momentum wane, and there's an expectation, certainly in some quarters, that the numbers will, for the current month, October, will be negative, reported the Friday after Election Day. That's when you know, perhaps the water gets a little chillier, and you might need to think about the stimulus wetsuit, as it were.
I expect this conversation to end up in a column at some point in the future, Cameron. Thank you. I don't know why I asked. Cameron Christ, Bloomberg News, on the latest and how cold or not that water is. On the economic data a little bit later this morning, the PMIs and the ISM Services Index coming out later this morning. Michael McKee will break that down for you, 9:45 Eastern and 10 a.m. Eastern for that data. I get my words out this morning. In your market, shaping up as follows. I'm doing okay. It's Monday. Let me ease into it. Just let me go slowly.
Monday. You didn't have a full English.
I had a little bit of scrambled eggs, some plain porridge, a little bit of honey, hot water and lemon.
Get a full
Just
English.
ease myself into the week.
Okay.
Tomorrow we'll start with a beer. Futures up 7/10. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I'm canceling order to sell short Japanese yen because momentum changed and direction changed. Okay? Let's see, maybe we'll place order later on. But for time being, the order was canceled.
The government to act here.
The Fed is going to have to be highly accommodated for many, many years.
We are in a low interest rate world, probably permanently.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. An extraordinary 2020, and wow, does October start most interesting. As you all know, the President of the United States at Walter Reed Hospital, he has been tweeting actively this morning, almost as much as John Farrow. We'll get to that in a moment. And then in the markets, we've got, I'd say, John Farrow, a bit of a celebration. Futures up 21, Dow futures up 184. John, what do you make of the markets this morning?
A strong correlation between the president's health, his tweeting activity, and equity markets. We bounce back. We hope we avoid the political crisis, the chaos that many people were thinking about last Friday. And there's the screen, up 0.6% of the S&P. In the bond market, this is where I think things get interesting for treasuries going into election day. If the polling remains the way the polling looks right now, at a national level, 53-39, that's the 14-point lead that Joe Biden has at the moment. It's getting a ton of attention. At some point, you really do start to think about pricing in the fiscal stuff. Now, Tom, the key risk at the moment, I'm catching up with Henry Peabody a little bit later.
On one of your other properties.
And his view on my other property, on my other real estate, and his view is that the risk is not a contested election because that risk is priced. The risk is that someone actually wins and you have to price in something else, which, let's face it, if you get a Democratic wave, that is higher yields, potentially more inflation, fiscal impulse, those kind of things. Now, I'm not saying that those policies will materialize, but they'll be the things that people wake up thinking about November 4th if that's the outcome.
Now, what we're going to try to do on Bloomberg Radio and Bloomberg Television, particularly this odd week, sort of mid-newsy kind of week, is give you the synthesis of what's going on right now, particularly out of Washington and, yes, out of the pandemic in Europe. Also, with the economics of financing investment, as John says, it gets us out to Q1 and Q2 of next year. And, Lisa, there's no better place to look at those dynamics than full faith and credit bonds versus high yield and IG. They were on two different planets on Friday, weren't they?
They were. You've got yields on treasuries going up, price down, and in credit you saw yields going down. Spreads, the extra yield that investors demand to own the debt over rates, actually come down, so basically become more creditworthy. Very hard to understand all of this except to build on what John said, which is an increasing number of people are saying you cannot trade the near-term turmoil. You've got to trade the longer-term outcome of whatever this election has to hold. And given the fact that Joe Biden seems to be breaking away a bit in some of the polls, means that people can price in a little bit more of that more progressive agenda, more fiscal spending. Right. And you're seeing, I think, Tom, the key to watch, the dollar, continuing its weakening trend, which also is key as people watch this election.
And I'm looking at that. We're sort of doing the data check here in pieces this morning, folks. It's a Bloomberg surveillance thing on a Monday. Euro-yen shows stronger euro over the last couple of days after a real bout of strong yen as well. John, one other idea, and I really want to go to you in London on this. The headlines out of Madrid and then Paris on the pandemic are outright shocking, with the leadership of Paris today really talking about a lockdown in the sense, as Francine Lacroix said, a restriction to bars closing on Tuesday. Is London anywhere near the draconian outcomes we see in Madrid and in Paris?
Not for me to say that, that's for the authorities, but I can tell you people are thinking about it a whole lot more, and the pressure's really building on the Prime Minister. I think he said there's a tough winter ahead, and going into 21, I don't think anyone thinks we wake up in the new year to a new world. We hope we get to the end of the year and the outlook for a vaccine really improves, Tom, and the distribution of an effective vaccine looks a whole lot better as well. At the moment, I would be focusing on the economic data and the correlation between the economic data and the experience that some of these countries are having at the moment. The PMI is in negative territory on a composite read for France, for Spain as well, and they're the two countries on the continent right now, Tom, struggling with coronavirus, and you see it reflected in the economic data as well. That's where my attention is. As for the happy talk around the euro, look, if you've got a bid on the euro, your long euro dollar, that upside has got to be capped by the idea that if they need more restrictions, this data will deteriorate.
Good way to start our conversation here, because I looked at 5-year break-evens. We'll explain that in a moment. David Riley gets us started in this hour with Blue Bay Asset Management. We're thrilled he could join us today. David, first chart I looked at today were those 5-year out, 5-year forward break-evens. It's so different for the United States with a whiff of inflation versus the disinflation of Europe. What does that signal?
Well, I think that signals that Europe is in a very difficult situation in terms of the extent of the disinflationary, deflationary forces. I mean, we've had record low inflation prints recently, and I think that's going to prompt the ECB to implement more policy action, but probably not until the end of the year or early next year. Well, I think in the US, there is still a challenge on the inflation front, but I think there's more upside potential, particularly if we do get a substantive fiscal stimulus after the US elections.
Given that, David, do you think that the euro, the rally that we've seen versus the dollar is overdone?
Well, I think if we get a situation where you were discussing before, a Democrat clean sweep, then I think market expectations will be for a very significant U.S. fiscal stimulus sometime in early 2021. I think it's going to be associated, at least initially, with a weaker dollar. I think you're right, Lisa. Does that play out with a stronger euro? I actually think it will benefit the sort of laggards of this recent dollar weakness, which has been emerging market currencies. I think a sort of Biden and Democratic clean sweep is unambiguously positive for emerging market assets, including currencies. So that's where I'd rather play, where I think we're going to see some future dollar weakness.
Is that just a trade policy trade, David? What is that?
Yeah, I do think that there is a sort of trade policy premium uncertainty associated with a Trump administration, and that extends not just to obviously relationships with China, but also the way that tariff policy is being used with a number of trading partners, including allies of the US as well. So I think if you take that out, that other things being equal, that implies a weaker dollar. And I think a big US fiscal stimulus package would also be then a sort of signal for the market to sort of more aggressively or decisively go into a rotation trade and a kind of global reflation trade. I think you get a steeper treasury curve, but as part of that as well, I think you get some rotation from, dare I say, from growth to value, but also into, I think, some of those assets like emerging markets that do better in a sort of global reflation world.
Dare I say it, you said it, David, so let's discuss it. This rotation, the elusive rotation, this idea that banks can start doing well, that curves can start steepening. I mean, that's the European trade. That's the long right there. That's the trade everyone wants to see work and just hasn't for so long, David. If it worked in the United States, can it work in Europe?
Well, yeah, I mean, I think it can help. I think if we see that kind of move in the US and steeper curves, then to some extent that would sort of show the way for European policymakers. I mean, we have seen a better and more coherent policy response from European policymakers, particularly on the fiscal side in this crisis, than we've seen in previous crises. But I do think that as part of, in order to get that, make out that kind of generalization story for Europe, we're going to need continued fiscal policy support, and I think the ECB is going to have to accommodate that by extending its asset purchases, by essentially saying we're going to backstop government borrowing and don't worry about how much debt there is right now. Keep on borrowing and keep on supporting the recovery. And I think if we get that as a story, not only in the US but also in Europe, then I think we will see steeper curves, and I think it will be beneficial for cyclicals and value like financials.
David, what's your hedge? What's your go-to asset to counteract if you're wrong about this reflation trade?
Yeah, I mean, it's actually not an easy thing to do to find hedges for portfolios right now, because I think the way that fixed income has behaved, core government bonds, during September shows that it's become very asymmetric. I think it's hard for those yields to go much lower, and I think if we do get some positive news, incremental policy news, particularly on the fiscal side, but also in terms of, for example, a vaccine before year end, then I think those yields sort of move higher. How do you try to sort of mitigate that risk a little bit? I mean, we've reduced some of the risk within our portfolios given the level of uncertainty at the moment, but also you stick with your bias to sort of up in quality to sectors like utilities in high-grade credit.
David, great to catch up, as always. Good to see you, sir. David Riley there of Blue Bay Asset Management on the latest in Europe. Headline coming out of Europe. Get your head around this one. It's Jens Weidmann of the Bundesbank in Germany speaking at the moment, saying the following. The German recovery likely to be incomplete for some time. Ample liquidity and low interest rates crucial. Tom, anyone familiar with the work and the thinking of Jens Weidmann would know that was almost unthinkable to hear that from him 10 years ago. And what's interesting about a crisis like this, Tom, and I'm sure you'll agree, is not how people respond in the emergency, in the immediate aftermath of a crisis. It's how they shift and the permanency of that shift over time afterwards. And to hear the hawk over at the ECB talk about low rates being crucial just tells you about the hole we're in and the shift we've seen.
And what's so important here is the percent of GDP of every story that's out there. And I don't have in front of me the percent of Germany needed. But, John, we are miles, even with Speaker Pelosi's fiscal stimulus, we're miles from the kind of fiscal stimulus economists are talking about, of 5 or 6 or even 7% of GDP. We're miles from that. Miles from that.
Out to 21 and maybe beyond, Tom. Coming up on this programme, University College London Professor of Political Science. Just a University College London Professor of Political Science. It'll be a surprise.
Professor Gupta. Radhika Gupta will be joining us.
I believe it's Julie Norman who will be joining us, Tom.
That would be very
good. So I'm looking forward to that conversation. Wonderful. Equity futures up 22. We advanced 0.7%. This is Bloomberg.
With the First Word News, I'm Radhika Gupta. There's confusion over how President Trump is being treated for the coronavirus. In public, his doctors remain upbeat. One says the president could be released today from the military hospital in Maryland, where he's been since Friday night. Still, another one said the president has been given supplemental oxygen, and he has received medication typically used in more severely ill patients. Meanwhile, the president unexpectedly left the hospital to greet supporters who had assembled. He waved to them from his motorcade in a bid to demonstrate strength. Joe Biden leads President Trump by 14 percentage points in the new Wall Street Journal NBC News poll. Biden's 53-39 lead is his biggest of the campaign. Voters were polled after Tuesday's debate, but before the president was hospitalized for the coronavirus. In the UK, Prime Minister Boris Johnson is warning the public that a, quote, very tough winter lies ahead. Johnson said he accepts that people are angry with the way he has handled the pandemic. He told the BBC that it's going to be a bumpy ride to Christmas, and it may even be bumpy beyond that. And there's a huge deal in Big Pharma today. Bristol Myers Squibb has agreed to buy biotech firm MyoKardia for $13.1 billion in cash. That represents a 61% premium to the company's closing price on Friday. The deal will expand Bristol Myers' lineup of heart drugs. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
If you see the leader of a country getting it, I think you start reassessing your chances. And so my guess is, without any formal lockdowns, people will be much more careful about going out.
Randall Krosner there, the former Federal Reserve Governor, weighing in on the prospect of consumers disengaging Fascinating column from Mohammed Al-Arian out overnight. Worth a read on Bloomberg Opinion. From New York and London, good morning to you all. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. 1 hour, 12 minutes away from the opening bell this Monday morning. And as the president's health improves, that's the good news. The good news in your market. Futures up 20. If you're long, that is. Equity futures up 0.6% on the S&P. Weaker dollar reflecting that improving risk appetite. Euro dollar 117.68. Curve steeper. Yields higher at the long end, including the 10-year, just up a basis point to 0.71%. I believe we hear from the Fed chairman tomorrow, Tom Keene. Jay Powell, put that one in the diary. At some point tomorrow, right here, we'll bring you some of the headlines on Bloomberg.
Far more importantly, Charles Evans, always fascinating, particularly on the desire to reflate with our Michael McKee. Look for that later in the morning. Right now, Julie Norman with us with UCL, professor of political science. And what's fascinating about her is her study and her expertise in academics for conflict. Her focus is on Arab-Israeli conflicts, and particularly a focus around the Palestinians, but far more, it is just simply about the politics of our conflict. Julie, I don't mean to make light of it, but you could take your conflict over to the culture wars of the United States of America. How will they play out in the next 29 days?
Well, Tom, that's certainly what we're all going to be looking at. This has obviously been such a polarized year, a very polarized election, and with the events of the recent days, with Trump's diagnosis, with the response to that, it's looking like the end of the campaign is going to look even more different than we had thought before. Real change-ups in both the Biden campaign and the Trump campaign and how they move forward in this crucial time leading up to Election Day in November.
And, I mean, you lead up to Election Day in November, all the focus on the president tweeting out massively, single line, all cap tweets. He just put out moments ago one that looked like it was pre-programmed, an election tweet as well. What should we look for from the other guy, from Vice President Biden?
Well, Biden really needs to keep up his own momentum for these crucial weeks. He has already decided to suspend negative ads while Trump is sick and has canceled a few events, but for the most part is moving ahead with his planned events starting in Florida this week. So it's really crucial that Biden keeps that going. He needs to make sure that he gets out the vote and keeps that enthusiasm going as it gets closer to November and doesn't play it too safe, even though he's ahead in the polls.
Julie, at what point do some of these Senate Republicans look at these polls and start to break away and go solo?
Well, you know, that's something that we've been wondering really from the start of Trump's ascendancy. And so far, most Republican senators have stayed aligned with Trump, of course, with a few pretty notable exceptions. But I think for Senate Republicans right now, especially with the Amy Coney Barrett nomination trying to push through the Senate, there's a sense of commitment to conservative values, conservative policies, and really trying to look more at the long game of staying committed to those aims rather than necessarily making a break from Trump and keeping a kind of a standard strong front with the Republican Party with these conservative values seems to be the best way forward for most of those senators right now.
Julie, just on process, just quickly, how difficult is it to get the Senate operational now, given that some Senate Republicans have actually been exposed to COVID-19? Can you walk us through the process just briefly for the next couple of weeks, what that might look like down in Washington?
Sure. So we've heard from Mitch McConnell that most Senate activity will be suspended this week and not start again until the week of October 12th at least. But McConnell has emphasized that the confirmation process for Amy Coney Barrett will move forward. In that regard, some of the meetings and procedures that they're currently having, people, even if they're sick or don't feel safe coming in, can tune in virtually. Where that's going to change is when there's actually a vote. For a vote, they will actually need senators to come and be physically present. And so that is really when it will probably depend on the health of those senators who have been infected so far and the extent to which the virus has moved between other members by that point.
There's so much confusion around the virus and how it's hitting Washington, and President Trump even with conflicting data, conflicting information from his own doctors over the weekend. Julie, from an international relations relations perspective, given the fact that President Trump is on the mend, he does appear to be, although there is such a lack of consistency in the information, how much does it put the U.S. at risk or put the U.S. at a more vulnerable position when it comes to dealing with other countries?
Well, we have seen some reports, even as recently as today, that this is a rather vulnerable moment for the United States. Having the president hospitalized, even though, as you noted, does seem to be recovering and hopefully will recover within the next few days. But when you have a president who is hospitalized, you also have a number of other members from the highest levels of government who are sick or a potential for being sick, and also just the country really quite distracted at this moment. From a security point of view, the United States is relatively vulnerable. But I say that relatively strongly. The U.S., everything else that we have is in place. There are so many agencies and people beyond the president and beyond the White House that are really gauge much more of our international relations, that this is not a time to be afraid, so to speak, but just to be mindful that it is a rather unprecedented situation.
Late start to the year for universities here in the United Kingdom, if you're not familiar with the education system, and I believe first day of the term today over at UCL. So good luck, Julie. Great to catch up. Julie Norman, University College London Professor of Political Science. Headline just coming from the New Jersey Governor, Tom.
Yeah, absolutely, John. You were way out front on this. It's like Governor Murphy is channeling Mr. Farrow. We spoke with the governor a few days ago. It was really a heated interview on the virus as it affects him, particularly the concentration in Lakewood, New Jersey. Well, there was a concentration, John, as you identified, at the Trump fundraiser, and here is the governor saying it should have been canceled.
Yeah, the timeline never stacked up. It never stacked up and still doesn't stack up. And it wasn't just from reporting and sources from in and around the administration. It was the White House Chief of Staff, Mr. Meadows, Tom, that basically revealed that they knew about the positive result of Hope Hicks before they left to Bedminster, New Jersey. Some people were pulled from that trip. And the question for many people is, why wasn't the president? Why did the president still go on that trip?
Well, there's that, but what upsets me, John, I really had I had a beverage of my choice in my hand here and really got upset at someone this weekend about how you look at the statistics. At that fundraiser, there were X number of people in the higher risk groups, over 60, over 70, over 80 as well. How many of those do you have to line up before you get very serious illness in one of them? That's the tangible risk at events like this.
Well, we hope that risk doesn't materialize, but the messaging, Tom, is also where the lines blur as well. Very difficult to tell everyday Americans the protocols they have to abide by if you don't, in the highest office in America. From London and New York, good morning to you all on this Monday morning. Equities up. Our thoughts with the President and the First Lady as their health continues to improve, particularly the President over the weekend. That's the good news, according to his doctors. Equity futures up 20. We advanced 0.6%.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en dos casas, en una 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas, un baño para cada habitación y una cocina para todas.
Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración.
Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo.
Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The second half will be a lot stronger than the first half in China. We're heading to what we call the golden season of auto sales.
We are very confident, we're going to have another big growth, 2021 versus 2020.
We did not see people kind of holding back.
Chinese customers are into, right now, buying individual mobility.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for
From London and New York, here's the price action on this Monday morning. Good morning to you all. You can hear Tom Keane. I'm Jonathan Ferro. Lisa Bramis with us too, as always. Equity futures up 0.6%. Euro dollar 117.61. Yeah, I know you're what? Up 0.4% on Euro dollar. You're going to spit it out?
No,
All right. Treasury or TAR2 up 2 basis points.
I'm exhausted, John, because the
I didn't mean to interrupt.
Well.
Crude $38.61.
Look at the
I don't
markets.
mean to interrupt you. I know, equities up after a week of gains. It's amazing what I've learned to do, a skill set that's absolutely useless anywhere else apart from this program, which is being able to look at a market, talk about a market, and converse with my co-anchor who's talking about something completely ridiculous. Life skills, Tom.
John, do the data. 7 goals, 6 goals. Why are there so many goals being scored in Premier League? Good morning on radio and TV. These are the important matters.
You complained about this for years.
I know.
You get it, and now you're complaining about it?
No, I'm not complaining. I'm just curious. Why are there more goals being scored? Seriously.
So I think it's a total fluke what happened over the weekend, Tom. A remarkable day. We've seen days like this in the past over the last few decades, but that was just a remarkable day. I think it's unlikely to be repeated. There were a load of defensive errors in that and a little bit of luck along the way as well. And some pretty dodgy referee calls in the mix too, Tom, still this past weekend.
Yeah, the penalty shot Richmond had against Man City was terrible. Richmond relegated to the Champions League over
do you want to explain what you're talking about?
No, that's what it is. Look at the headline from NBC.
No, why would you do that?
I would want to explain.
Shall I do that headline?
Do the headline, please. It's important.
I'll do that headline. The president and his doctors to decide about discharge later today. So hopefully we'll hear a little bit later today. Thanks, Lisa.
Anytime.
I'm trying. Hopefully we'll find out a little bit later today about when the president, if the president, will be discharged.
Can we all agree as amateurs that it's basically the thingy on the finger and the oxygen measurement? I mean, seriously, that's a key determinant here, isn't it?
Thingy on the
I think as amateurs, we shouldn't weigh in. I think that's probably the best course of action. I can tell you what you should do. You should bring in our next guest.
I like to do that. Brett Ryan with us with Deutsche Bank, their senior U.S. economist, and he went right to where I was in the unemployment report. It was a good report, mixed report, and markets certainly reacting to it. But Brett Ryan, you went to median duration, which really shows 2 Americas. Discuss what you saw in a little bit more difficult median duration statistic.
Right. So the median duration is basically how many weeks people have been unemployed. And so, one of the things that we've been following is people that say they're on temporary layoff versus permanent layoff. And the issue with that is it's sort of a distinction without a difference when the number of weeks that people are unemployed keeps extending. And so right now, you're seeing the median duration go out to 17.6 weeks. That's the longest since 2012, really. And so, one of the issues that we had in the wake of the financial crisis was long-term unemployed. Because the longer you're out of a job, the more your skills erode, and the harder it is to get back into the labor force.
But the Peter Hooper team has absolutely nailed this. I mean, full disclosure, folks, Deutsche Bank has its moments where it's very optimistic on the direction, and you guys rolled over here a number of weeks. Reaffirm right now your caution on the American recovery.
Yeah, so, it's been certainly a surprisingly fast start out of the gates. There's no question about that. We've recovered half of the jobs lost between February and April. The problem is looking forward, and every member of the Federal Reserve has basically said, we need more fiscal support. Without that, without FPUC benefits, which have now been used up, the FEMA money is now gone, that's $300 billion in income that's going to be lost between Q3 and Q4. That's going to come during the holiday spending season, and it's going to come upon those with the least amount of savings and the highest margin of propensity to consume. So that's why, while we've had a faster start, looking forward, it only gets more difficult from here, and there's a real risk that consumer spending could be negative in Q4. And that's one of the reasons why we're more cautious.
Brett, there's a narrative that's becoming increasingly popular that even if we don't get fiscal support from Washington before the election, we'll get it at some point, and it doesn't really matter when. It'll help support the economic recovery on the other side. And then you have other people say, well, if you get bad data, if it really shows a market deterioration of the economic situation, that changes the dynamic, and you have to start counting for that in your calculus when you decide whether to invest. Have we already crossed that Rubicon? Are we already at the point where the data is showing a material deterioration in the momentum of the economic recovery, and people have to take count of it?
Well, I think number one, tell that to the 26 million people who are collecting some form of unemployment insurance right now, and they're seeing their income cut in half. Tell that to the restaurants that are going into the winter season. The PPP loan money has dried up. There's $130 billion still sitting there. Why not allow them to take out another loan and get through the winter? Because these programs were designed to deal with a 4 to 6 month shutdown, not a year shutdown, or at least restricted capacity. And these businesses need help now, and airlines as well. They need help now, not 3 months from now, because you're going to have businesses that go under in the meantime. So I think that's the one thing. But yes, will there be fiscal stimulus at some point? Yes, but it's more important you're going to delay the recovery by causing hardship over the next 3 months for thousands of businesses, restaurants that are going to go under if they don't get more PPP money, and it's going to hurt demand, especially during the holiday season. And so companies are going to be less likely, or less willing at least, to hire, and it just sets you back unnecessarily.
Okay, a lot of policymakers will say, show me the numbers, right? How much will it set us back? If it sets us back a little bit, but we can remove some of the political silly season around us, then it's worth it. How much does it set us back if we don't get fiscal support before the election and it's prolonged for months to come?
Well, I think it risks the consumer spending recovery, and you could have a negative quarter of consumer spending, and basically that's a 50% chance that you're going to have a negative quarter of growth, and the economy is not exiting a recession, and it's hard for the NABE to declare the end of the recession, and it could weigh on jobs. We've already seen a slowing in the pace of job gains, as we saw at the last report. As the BLS noted itself, the unemployment rate, while, it did tick down, it would have been 40 basis points higher if not for misclassification issues. So you're still really at 8.3% unemployment rate.
Well, great, but that doesn't help me. Where's the Deutsche Bank real unemployment rate? It was a parlor game we've been playing, Brett, where we go through the math and everybody says the math doesn't work. What's the real number? What's your recalculated real number? Is it double digit, or can you be more optimistic than that?
Well, I would say, I mean, from the U3 perspective, it should be a 3. From a U6
yeah, but I want the U Deutsche Bank. I want the U Deutsche Bank perspective. Come on, we all see out there what's going on. The U3 is a joke. What's going on? What's the real number?
Yeah, I think it's definitely a double-digit number right now.
Thank you.
When you're looking at what's happening here, Tom, is that as you see continuing claims on the state level start to go down, you're seeing not a commensurate, but a good portion of those rolling off are going on to pandemic emergency unemployment compensation. So that's the federal program with extended benefits that go towards year end. Same thing, you're seeing PUA, even though California had some issues with reporting, PUA, which is Pandemic Unemployment Assistance, that's also ticking higher. So the total number of people collecting claims is not coming down as fast as what you would think just looking at the state continuing claims. By the way, PUA and PEUC both expire December 30 at the end of the year. If Congress doesn't do anything, then that's another big hit to income, possibly another couple $100 billion, 200 to 300 billion, and that further dents, profile for spending.
Brett, just quickly, you've quantified the kind of damage that would happen to the U.S. economy if we didn't get that fiscal help. Let's just talk about what kind of damage, not just in the United States, but in the UK as well. Here the Chancellor talking almost about embracing creative destruction and not allowing it to rip, but acknowledging there are permanent changes in this economy and some businesses that won't be viable in the long term. Can you embrace creative destruction to any degree in a pandemic with the restrictions this government has on right now?
When it comes to, restaurants, do I want to see my father with 4 restaurants go out of business? And is that creative destruction, or is that somebody who, through no fault of his own, is being restricted to 50% capacity? So I think it's industry by industry, and when we talk about creative destruction, businesses that are not longer viable through technology or some sort of natural process, sure. But for businesses that, through no fault of their own, are being restricted by the state, right, and they can't operate profitably, there needs to be some sort of state aid.
Brett, great to catch up. And send our best to the family, won't you? It's a tough industry. Brett Ryan there, Deutsche Bank senior U.S. economist. Headline cross on a Bloomberg comes from Mark Meadows on Fox News moments ago, saying he's optimistic, this is the White House Chief of Staff, optimistic that the President of the United States will be discharged later today. So an optimistic headline crossed on a Bloomberg from the Chief, Tom, the White House Chief of Staff, Mark Meadows, in the last couple of minutes.
Well, certainly a real pressure to get back on the campaign trail, and certainly after the polls that we saw, John. But you really got to wonder. I mean, I just like to know, when do we hear from the medical professionals as well? John, what is extraordinary? We say good morning to a gentleman down in the South watching us as well. He says that team surveillance has great interaction. Great interaction. We have great interaction. It's just.
Well, is that a euphemism?
Not you and me, John. I think it's more you and Lisa. I don't know. I mean, we have.
I think that is great interaction. You and I don't know if you'd bottle that. I don't know what that is.
It's great interaction is what we have when we talk.
One thing to call it.
Yeah.
When I do my annual review, I think my manager describes it as something else. Yeah. I'm not sure they turn around and say great interaction. Yeah. I think it's something else. I think that when they sit down with you, I think they describe it as
Tom is
something
drinking.
else as well.
Tom is drinking.
Good. The 30-year bond to save us 1.5266. John, we'll move that up to a 1.53. Seriously, you really wonder where's the tip point on 10-year and yield moves, higher yield, lower prices, and you really wonder, John, where that is.
I'm with you.
It's porridge.
It's the most exciting part of the morning.
I'm having porridge.
Are you? Do you know why this is the most important and exciting part of the morning? Because I step away in about 2 minutes and I fly solo for 60.
To migrate to your other property. Who do you have today? You got somebody good?
That's the carrot. I've always got someone good.
Okay.
I've got 4 people good. I'll tease someone next, just for you, Tom.
Very good.
Right here on Bloomberg.
With the First Word News, I'm Ritika Gupta. Health briefings have offered false or misleading information about how President Trump is being treated for the coronavirus. That's raised questions about his condition. One doctor says the president could leave the military hospital in Maryland today. Still, another disclosed that the president had received supplemental oxygen. Plus, he's being treated with a drug that is usually used for more severely ill patients. Meanwhile, President Trump paid a surprise visit to supporters of his who had gathered outside. He left the hospital to visit them. Video showed the president being driven in an SUV while he wore a mask. And the Republican plan to confirm Supreme Court nominee Amy Coney Barrett by Election Day is now in peril. 3 Republican senators have tested positive for the coronavirus in the past few days, and at least 8 others are known to have had direct exposure. Majority Leader Mitch McConnell's narrow margin for confirming Barrett would evaporate if just 3 Republicans were unable to vote. And the mayor of New York City will close businesses and schools in 9 neighborhoods because of a rise in coronavirus infections. Bill de Blasio says the school closures in parts of Brooklyn and Queens will start Wednesday for an initial period of 2 weeks. They could then be extended. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
The scale of the climate crisis is just staggering. But you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
What would you say are the leadership qualities that you brought to the table or that you most admire?
I don't always have to be the smartest person in the room. I know collectively what a team needs, and I love having really great debates.
I'm
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
There was that momentary episode of the high fever and that temporary drop in the saturation, which prompted us to act expediently to move him up here. Fortunately, that was really a very transient, limited episode. A couple hours later, he was back up, mild again.
Dr. Sean Connolly there, the White House physician, weighing in on behalf of the president. Mark Meadows, the White House chief of staff, just speaking to Fox News moments ago and saying the following. He's optimistic the president will be discharged today. He goes on to say that the president continues to improve, he is working, and that doctors will evaluate the president later this morning. So late this morning, Tom, is when we could get an evaluation about the president's potential discharge from hospital. We'll be talking about these issues at the top of the hour on Bloomberg TV. We'll do that with Henrietta Trace of Vader Partners. We'll talk politics with her a little bit after that. Henry Peabody, looking forward to catching up with him. Mislav Matejka, he'll join us as well around the opening bell. And then Tony Fernandez too. Just rounding out my guest, Tom, for the next hour on Bloomberg TV.
Very good, John. Very good. Very good. Looking forward to that as well. John Farrell driving forward the conversation, that important Kudlow interview on Friday as well. Right now, as we saw from the good doctor, a discussion of four-syllable words. Drew Armstrong is expert at 4 and even 5 pharmaceutical syllable words. He is senior editor for healthcare and will translate what we all tried to learn this weekend. Let me start with just a general question, Drew Armstrong. Which of these cocktail of drugs is the one that has your attention?
I think the one, so the president has gotten 3 drugs, 3 main drugs. He's getting a number of others as far as we know. But, he got an early dose of an antibody therapy, which is basically a replacement for the body's immune system early on. That's the experimental drug made by Regeneron. He has been getting a antiviral drug, which is kind of a direct attack on the virus itself, remdesivir, that's made by Gilead. And then most recently, we were told by the White House that he has gotten a steroid called dexamethasone. That is the one that I think has caught my and a lot of other people's attention because it is typically used in patients who are kind of in the second phase of this disease. And it's not necessarily something that acts on the virus itself, but it's meant to combat an overactive immune system or overactive inflammation that can really hurt patients when they get more serious and need oxygen support or ventilation.
Do these 3, Doctor, do any of them have a titer effect we can identify where we can say the president is over one of these 3 concoctions by Tuesday or by Thursday or by never? I mean, do we have any idea of the life of these drugs in his body?
I think one of the things I just want to back up for a second here with is that, there's a tremendous amount of speculation based on what the typical patient would get and what that means about the president's care, about the president's exact health status. And in the lack of really clear information from the White House medical staff about what he is doing, we really do not have a lot of information. People are having to speculate on how he's doing based on the drugs he's used. But I think they're speculating based on the assumptions that he is a typical patient who's getting typical medical care, not, kind of more aggressive VIP medicine, which can be a bad thing, a neutral thing, or a good thing. This is a really, really strange environment where I think, it's easy to assume that the normal things are happening, and they may not be, and we don't know if that's good or bad.
Drew, we don't want to go into the realm of speculation, and I'm glad that you said that. We don't know where President Trump is health-wise. Frankly, this is a very tricky disease, and it's unlikely that there's a clear view anywhere right now. Drew, based on the cocktail of drugs, though, that President Trump has been administered, and given how many therapies there are available, are we getting to the point where if somebody gets the virus and they are given the right therapies, they can survive at a much higher degree than in the previous 8 months, say?
Yeah, absolutely. I mean, we've now had, more than 6 months of medical experience dealing with this virus. There are more drugs available. We know more about how they work, and not just how they work, when they work. And that's really important to emphasize. We know when to use these drugs in the course of a disease to actually get a better chance at a positive outcome. So, yeah, I mean, just fundamentally from a medical perspective, we're in a way better place than we were treating this virus in patients of all types than we were at the very start of it. And I think it's also worth reminding people that, yes, this can be a deadly disease in some people. It tends to be more deadly the older and the more underlying health conditions a patient is, but, it is by no means a death sentence at all. And I think sometimes this gets written about in that way. Most people do tend to recover from this. That said, it's still, potentially very scary, but the care has gotten better.
Drew, this is a sensitive topic, and we all wish the president very well, and we hope that he recovers quickly and strongly. There is an issue that people have been raising about the inconsistency of information, and as somebody who's been covering healthcare for a very long time, can you give us a sense of the damage, the public relations damage that can be done if people are not trusting of health officials in what they give out in terms of information about the virus, guidance, or even the president's own health?
Yeah, I think we've seen right now a demonstration of all of that. If you look at, some of the steps that the White House around this Amy Coney Barrett event didn't take, we talk about a kind of, a bit of a mosaic of steps that you can take to protect against this virus: social distancing, masks, using testing to find the cases after they happen and make sure that those people are not exposed to others. The White House, in this case, has taken, only a handful of those steps. They obviously were not practicing social distancing, as some of those photos of indoor gatherings show. And, we're not really very big on the use of masks among some of those people. I mean, I think it's worth noting that, if I had told you that we were going to invite, your 74-year-old grandfather was going to be having a birthday party. We were going to fly in people from all around the country who haven't been practicing social distancing or wearing masks, and we're going to have an indoor-outdoor gathering with 150 people in a poorly ventilated indoor space. You'd say, now, but yet, that's exactly what the White House did here. And I think a lot of public health experts have been saying, you could not have designed a better case that looks exactly like some of these other super spreader events we've seen around the country to put people at risk from the virus.
That will all be battled out here in the coming weeks, indeed, after the election, even after a given inauguration. Drew Armstrong, thank you so much. With Bloomberg News, really quite expert on the mystery of the pharmacology going on right now. No mystery about the markets, Lisa. Futures up 22.
Yeah, and the reason why, you can pick your reason. Basically, people are saying it's because the president's doing better. Other people saying that fiscal support is more likely to get passed before the election. Tom, you can spin a narrative with fiscal support any which way, any given day. It probably could be part of the narrative. It isn't getting done, though, right now. I mean, it could, maybe, perhaps, but right now, we've heard the story again and again.
I get out the calendar. 29 days to the election. I have real trouble seeing the benefits and the weighing the pros and cons of fiscal support, even though, as we just heard from Brett Lewis of Deutsche Bank, it is needed, to say the least, with their unemployment statistic. Futures up 22, Dow futures up 210. The VIX settled at 28.83 towards the market opening. Oil, 38.45 rallies. Oil large, up $1.40 as well. Dollar weaker this morning. The yen, 105.58. On Bloomberg Radio, on Bloomberg Television. Stay with us. Good morning.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From New York and London, for our audience worldwide, the countdown to the open starts right now with 30 minutes until the opening bell. Equity futures up 21. We advanced 0.6% this morning. Good morning, good morning. We begin with the big issue, the president on the cautious road to recovery following confusion over the weekend, contradictory messaging and unanswered questions. His medical team insisting they were simply attempting to reflect the mood of the president.
I was trying to reflect the upbeat attitude that the team, the president, that his course of illness has had. Didn't want to give any information that might steer the course of illness in another direction. And in doing so, it came off that we were trying to hide something, which wasn't necessarily true.
The president talking positively about his recovery, insisting his health is improving.
I came here, wasn't feeling so well. I feel much better now. We're working hard to get me all the way back.
It's been a very interesting journey. I learned a lot about COVID. I learned it by really going to school. This is the real school. This isn't the let's read the book school. And I get it, and I understand it.
The president wrapping up the weekend with a drive-by greeting of his supporters, his doctors indicating he could be discharged as soon as today. With the latest, Bloomberg's Abigail Doolittle joins us now for more. Morning, Abigail. White House Chief of Staff Mark Meadows suggesting we could hear something on that in the next couple of hours.
Well, John, good morning to you as well. And certainly a weekend of confusion and uncertainty around the state of President Trump's diagnosis of COVID-19. And it seems to break into three questions or buckets. First, when did the White House first know that President Trump actually was diagnosed with COVID-19? Second, what is the true state of his health? And third, what does all of this mean for his campaign? As for the diagnosis timing, was it Wednesday or was it Thursday? The state of his health, there's lots of confusion, it seems, around his doctors. When was he put on oxygen? The timing of lung scans, what did they show? Dr. Conley there on Saturday trying to reflect the upbeat campaign, while Mark Meadows, Chief of Staff, putting out a little bit more of a serious messaging. So lots of confusion. Plus the therapies he is on, President Trump, those used for more serious cases of COVID-19. And with less than a month to the election, John, what will this mean for President Trump's ability to campaign? Now, despite all of the uncertainty, investors typically don't like that. We do have U.S. futures up today, perhaps in part on that news, the possibility that President Trump may in fact leave the hospital today, John.
Abigail, hopefully, thank you very much. The latest from the White House Chief of Staff, Mark Meadows, speaking to Fox just moments ago. He's optimistic the president will be discharged later today. The president continues to improve. He is working. The doctors will evaluate the president later this morning. As the president's health seemingly improves, so does the tape. Here's the price action, 27 minutes away from the opening bell in New York City. Equity futures up around about 0.7% on the S&P 500. The move you see in equities, the improving risk appetite reflected in the bond market, yields up by 3 basis points on a 10-year. We'll talk about the long end of the bond market a little bit later this hour. But it's interesting, that's for sure. In foreign exchange, dollar weaker, euro stronger, euro dollar 117, and let's call it 70, up around about 0.5%. That's the price action. Here's the story on policy. Henrietta Trays of Vader Partners expecting the president's health to have little impact on stimulus negotiations, writing the following. The president contracting COVID-19 has not materially moved the needle on Senate Republicans' opposition to more than $1 trillion in stimulus. There is widespread expectation of further fallout for the election and the party at this point. Henrietta, I'm pleased to say, joins us now for more. Henrietta, let's start there. I think the question of the moment, what is the biggest gap, the biggest spread, the distance between Secretary Mnuchin and this administration and Senate Republicans, or Secretary Mnuchin and this administration and House Democrats?
Yeah, that's exactly the question. I mean, the difference is that most of the members of the Senate Republican Conference do not want to vote on another stimulus bill now that we're, 29 days away from the election. So I think that's the biggest, most misunderstood component in the negotiations right now. And you played President Trump's clip yourself, and he says, now I just went to, effectively the school of hard knocks on COVID-19. And Speaker Pelosi is going to hear that and say, okay, great. Well, now you understand how severe it is. Why don't we go back to the HEROES Act? Why don't we get $2+ trillion in stimulus? Get this out. There's 206,000 people who've died so far. This is for real. We have a 7.9% unemployment rate. We need expansive unemployment insurance benefits. There's no vaccine yet. We need state and local aid. Schools are potentially starting to shut down again. We've got upticks in Wisconsin and New York, amongst other states. Let's get a real deal package. And the second Speaker Pelosi says something to that effect, you no longer have a path to 60 votes in the Senate. And that's really going to be our major sticking point, regardless of what the president tweets about it. The delta between the two sides was $1 trillion before the president got COVID, and I imagine now it could be even bigger than that. We've had also a situation where there is no urgency in the Senate Republican Conference. Maybe President Trump can insert some urgency. That would certainly be beneficial to the conversation. But obviously they're out of session now until October 19th. So no matter what, you're not going to be getting an airline bailout. You're not going to be getting a stimulus package. Nothing will pass until that date at the very earliest. And that's assuming Republicans can come back then.
Henrietta, let's add even more color to this. The administration's position, I caught up with them recently on Friday. They said 1.5 trillion. The numbers are out there. We all know them. Really the biggest and most important spread right now, as you indicate, is the spread between Senate Majority Leader Mitch McConnell and his ability to get a bill through the Senate, between him and Speaker of the House Nancy Pelosi. Now, a quote that you picked up on and I think is really important as well. When asked, Speaker Pelosi, is something better than nothing? Her answer, Henrietta, is no. Now, I just wonder what that something needs to be, what reconciling with Speaker Pelosi actually looks like.
So when you speak with House Democrats, they'll tell you that they think that the economy needs upwards of $4, $5, $6 trillion. That's everything from unemployment benefits to get us a bridge into next year, into the second half of 2021, and then a massive Get Jobs Back initiative, which is infrastructure. So something is not better than nothing means we need at a minimum, probably $2 trillion. If they had everything that they wanted, it would be as high as $6 trillion, per my conversations with those staffers. So the biggest difference would be things like unemployment insurance benefits, the magnitude of how much benefits they're going to be able to dole out, state and local aid to schools, contract tracing, funding, child care, paid sick leave made permanent. The delta is expansive. And then when Speaker Pelosi, another key comment to watch very closely is when Speaker Pelosi talks about values. The difference between the dollar figures is one component of this, but when Speaker Pelosi says we have a values different, that's not quantifiable. You're talking about her saying effectively, we want to provide aid to child care tax credits or to schools, and Republicans saying we want a tax credit for X, Y, and Z for high income individuals or for businesses. We want massive business liability components and protections there. That's the values difference that you cannot throw money at unless you are willing to get into the $3 trillion range.
And Renda, what all parties have in common right now is they're all trying to manage the optics. Is it your base case that this could just play out through the election into November? Because bottom line, nobody wants to be seen as the person who walked away.
Exactly. There is no deadline at this point. There's no manufactured deadline. I thought that Speaker Pelosi and Treasury Secretary Mnuchin had done a good job of trying to create some urgency around Thursday, Friday of last week. And then when they recessed the House and the Senate obviously shut down for 2 weeks, you now have a vacuum. There is no urgency of any kind and no momentum to build off of. So that creates a situation where the investment community should anticipate phone calls between Treasury Secretary Mnuchin and Speaker Pelosi. Clearly, they're probably not going to get in a room together at this point. But you're going to continue to get these headlines. President Trump tweeting today that he's going to provide a tax cut. You don't have any votes for that, but you can continue to keep hope alive by throwing this sort of word salad out into the ether, and that's what both sides have been doing. I would not anticipate that stopping until after the election, my expectation is you don't get a stimulus bill until the first quarter of next year.
This is what's tough about campaigning right now for the administration, Henrietta, and for the Republican Party. When you look at that tweet storm this morning from the President of the United States, he didn't put our handling of COVID-19 vote. He didn't talk about that. Yet that's going to be the single issue at the top of mind for so many people as these guys try and campaign. How difficult is it going to be in the final weeks of campaigning to talk about the kind of issues that the former VP Joe Biden is weak on and stay away from the kind of issues that this president has not polled well on for months?
Well, it's outside of their control. The president is ill, and there are 6 senators who are currently in some form of quarantine or have coronavirus. That means that you cannot segue beyond that until the virus itself decides to leave. And obviously that's not within the campaign's control. What I think you'll see, not necessarily right now, but starting next week, is Republicans really try to hammer home the Supreme Court justice nomination process. It will be happening partially remotely. They're going to great lengths to have the Judiciary Committee be able to convene, and they'll try to keep the focus there. Senator Lindsey Graham, who's the chairman of the Judiciary Committee, is in a very tough re-election. They had a debate last night, and he will be doing everything in his power to focus on the Supreme Court starting next week, October 12th. And that'll continue in the committee for that whole week. So optimistically, they'll be able to create a narrative around the Supreme Court then. But other than that, it's going to be coronavirus all day, every day.
Final question from me. Equity futures up nicely, up 0.6%. If you just switch up the board briefly and look at the bond market, yields higher. I understand risk appetite is improving, but I just wonder at one point, Henrietta, financial markets start thinking about the sweep. The poll that everybody's talking about this Monday morning after the weekend, 53-39 from NBC and the Wall Street Journal. The 39 belongs to the president. The 53 belongs to the former VP. Henrietta, you do not believe in the contested election outcome. You don't buy that. This market's pricing it. How do you think about that issue?
Well, on one side, you're looking at all the data that we've had literally for 6, 7, 8 months. And the most important thing is not necessarily the divide or the fact that Vice President Biden is up above 50% in that latest poll that you mentioned, which is a breach that former Secretary of State Hillary Clinton never really was able to stay above. You have a situation where every single data point from the 2018 midterms to the 2019 primaries suggests that we're going to have a blue wave of plus 8.7% at a minimum. That's not a path to a contested election. And if you want to take the flip side, you literally have to manufacture invisible people and say people aren't telling the pollsters the right information. The issue I have with that is that you have an idea then in that view that the people are lying to the pollsters the exact same margins basically and have been for 6 months. That's unrealistic. That's not usually the way that market participants operate. You're usually really dealing with data-driven folks. And the data points to a pretty substantial win in the Electoral College and no real question except for maybe how long it takes to count mail-in ballots.
The wonderful Henrietta Trace. That's the view from Henrietta of Veda Partners. Henrietta, always great to catch up with you. Thank you. 18 minutes away from the opening bell. Equities up and doing nicely, up 0.6% at the market desk with your stock movers. Here is, ahead of the opening bell, Scarlet Fu.
Hi, John. I'm going to echo what Henrietta said. It's coronavirus all the time because a pair of biotech names are gaining on the ultimate validation after President Trump's doctors put him on some experimental treatments. So President Trump is taking a Regeneron antibody cocktail that's still in trial trial phase. One analyst says the treatment may get an emergency use authorization in a number of days. The president also taking Gilead's remdesivir in addition to steroids that are normally used in severe cases. And moving on to big tech, Taiwan Semiconductor likely to report record third quarter revenue later this week, thanks to orders from Apple and Huawei, which, as you know, is another Apple supplier. All this according to Taiwan media. 2/3 of TSMC's 5-nanometer capacity is being used to make Apple's new processors. In its latest iPhone, Apple's set to open the market higher, currently at 114. John?
Scarlett, thank you. Ahead of the opening bow, there's some of your movers. The equity market surging quite nicely, up around about 20 points on the S&P 500. Up next, Vice President Joe Biden surging in the national polls. What about everything else? That conversation coming up next with Henry Peabody of Massachusetts Financial Services. Up next right here on Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
The market must be pricing in, the possibility of a Biden victory.
Joe Biden leading in the polls.
That's what the polls say.
Polls have suggested they have less confidence in President Trump.
The consistency of the lead that Joe Biden's had in polls,
including in some key states.
The consistency of the lead he's had in the betting markets.
Markets are actually pricing in some sort of higher uncertainty.
The market is thinking about some of the consequences of a Democrat administration.
In the 4 weeks to the election, this market could go every which way.
Isn't that the problem? Investors discussing recent polls pointing to an increasing likelihood of a Joe Biden victory with 29 days until the election. A Wall Street Journal NBC News poll showing President Trump facing his largest deficit of the campaign, trailing by 14 percentage points. With the latest, here's Bloomberg's Scarlett Fu. Hey, Scarlett.
Hi, Jonathan. Yeah, stocks are set to make a recovery, but you look at the VIX, it's set to climb higher for a 6th straight day. One school of thought, of course, Joe Biden winning the presidential election, but also an increased chance of a clear winner overall rather than a contested outcome. And if the Democrats win the presidency and the Senate, that would set us up potentially for even more stimulus. Now, within equities, a Biden victory could spark a lasting shift to value. We've seen inflows into value funds over the last couple of months, but performance hasn't always caught up. up. That may change. According to JP Morgan strategists, they see a broadening in style and regional performances after months of value and European stocks dramatically underperforming growth. Goldman Sachs also sees a Democratic sweep that would favor European cyclicals, China-exposed stocks, and renewables. Look at the fixed income market as well, because since the presidential debate on Tuesday, the yield curve has been steepening. We've seen the rise in yields on the long end and on Friday, despite the drop in equity prices. That rise in yield continues today while stocks are recovering. Cameron Kreis, a Bloomberg macro strategist, says this reflects more stimulus and more borrowing is coming. Whether it comes immediately or next year, as Henrietta Trace said, we're not clear yet, but that's what investors are betting on.
Scarlett, thank you. That's Cameron's take. Here's Henry Peabody's take of MFS. He says the following: there is still substantial risk going into the election. The risk to the market is not ambiguity around a winner. The risk is a clear winner. And with that, there could very well be upside in U.S. Treasury yields. This is the outcome that the market is not priced for. We're lucky to have Henry with us right now. Henry, fantastic to catch up with you, sir. Let's just go over that again. The risk is not a contested election. That's priced. The risk is a clear winner. Put some meat on those bones, Henry.
Sure. I think the tone shifted a little bit in the past couple of days, but if you look at least last week, if you look at the dated VIX curve, you can see that there's actually a little bit more volatility and ambiguity priced in to the month after the election, which our quant team at MFS pointed out, and I'm glad they flagged it. And you've seen a little bit move higher in yield and the curve steepening, break-evens widening. But this is really just the beginning. And I think that if you do have a clear winner on election day, then we take a lot of risk out of the Treasury market. I don't think you can eliminate out of hand the possibility that the data is a little misleading. I think we've learned that in prior elections. Yeah. So you can't take that to the bank. In addition, can't you see Trump accepting victory after the first count of red votes on election night? So we're not out of the woods yet, and I think that the gap in the polls is wide. But like I said, you can't take that to the bank yet, and we're still here at sub 75 basis point yields in 10 years, and we've got a lot of room on the upside. Should you see a $5-6 trillion kind of package talked about by the Democrats? So I think that there's a lot of risk in duration. You see market positioning. You see the reaction to Pelosi's comments last week. You see the reaction to slightly negative credit news, and you see gaps wider in spreads and move sharply higher in yield. So I think the market is positioned very nervously long duration, very nervously long credit. And should you see some surprises, that's probably the pain trade. I had thought it was lower in yield, but given positioning, I'm changing my tune a little bit.
Well, let's think about whether that nervousness is starting to get squeezed this morning. Let's leave this graphic up. 2s, 10s, 30s. Yields up at the long end by 5 basis points. Now, Henry, I'm a journalist. Forgive me for getting ahead of myself. I just wonder, do you think we're starting to see just a little bit of that this morning?
Yeah, I absolutely do. And you're starting to see a little bit of a breakout in 5s, 30s, which IQ in on the front end of the curve is relatively pegged from the Fed. But the long end of the curve is theoretically free to do its own bidding, at least more so than the front end. So you look at some of those curves steepening up, and I think we're beginning to coalesce around that story. But we need to break through some key levels, 90 basis points on 10s, for example. And I don't think the narrative has shifted as much as it should. The narrative needs to shift to further fiscal, to continued coordination between monetary and fiscal policy. Towards next year, there being a stimulus package with the Fed keeping rates low because they'll overshoot their 2% target. And once you start getting that narrative into the market, then you can really embrace a steepener more aggressively. But until then, we've got a lot of wood to chop between now and the election. Vol is high, credit is tight. You're seeing lower quality issues tap the market. You're seeing signs of less disciplined buyers coming in. And I think the credit is beginning to be put into weaker hands. You need to embrace a process and a long-term view here and try to avoid the day-to-day headlines and try to avoid the back and forth between legislatures talking about judicial appointees and fiscal packages. Yeah. It's too much to stay short-term.
Are you de-risking?
Yes, we are. We're finding ways to shift, away from cyclicals, down in energy. We're also looking at ways to take risk out of financials, for example. If the growth curve doesn't pick up, you will start to see losses pick up, and that's going to be focused mainly on the regionals. So we're going up in quality and financials, focusing on insurance where there's pricing versus banks, though probably banks will probably benefit from a steeper curve. And the prior segment talked about a shift from growth to value, and that ties in there as well. But we're generally speaking taking risk down. We like to think about what is on offer in the market compared with our view of credit and fundamentals. And when there's dissonance, that's where there's opportunity. And for us, the dissonance is the very rosy view priced into credit compared with our relatively sanguine view about growth and making up the output gap going forward. So we're cautious, and we know that there's going to be a better time to deploy risk.
Henry, I know you're an incredibly deep thinker about some of the political and economic forces as well. We would love to get you back on the program soon and talk about some of the longer-term issues you're thinking beyond 2021, 2022, and through the next decade. Henry, really lucky to have you on the program this morning. Henry Peabody there on some of the price action and some of the risk on the horizon. Coming up, the analyst action you need to know. That'll be next in our morning calls. And around the opening bell later, JP Morgan's global market strategist, Mislav Matejka, right here on Bloomberg TV.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It is building up to be a really interesting morning. Equities improve as the president's health improves. That is good news. We're up 0.6% of the S&P, squeezing the bond market. We'll talk about that later. Your morning calls, a look at some of the analyst recommendations on Wall Street this morning. We begin with Oppenheimer naming Starbucks an actionable buy. Street high price target 101. The analyst citing accelerating same-store sales and attractive earnings power. Your second call from BTIG downgrading Dunkin' Brands a $75 price target. The analyst citing an unattractive valuation with expectations for more muted growth next year. And your third and final call from KeyBank downgrading AT&T to underweight, $25 price target. The analyst sees very few positive catalysts with macro pressures continue to weigh on the consumer. Softer there, lighter lower by 0.4%. Up next, JP Morgan considering a shift towards value following the US election. That conversation coming up next with the strategist Mislav Matejka right here. This is Bloomberg.